Yes, very good morning to all of you. Yes, very good morning, Anna. So today till evening we'll discuss PGBP chapter. Today till evening we'll discuss PGBP chapter. Yes. So now we can begin our discussion with the PGBP. You know, it is one of the head of income. What is the full form? You know, what is it? Profits or gains from business or profession. Remember, from business, if you got any income, from business you got any income, or from profession if you got any income, that should be taxable under the head PGBP only. That should be taxable under the head what? PGBP only, remember. So now you know how many heads of income we have? 5 heads. First one is income from salaries. Second one, income from house property. Third one, PGBP. Next one, capital gain. Other one, income from other source. So now we have to remember the range of sections under each and every head. Yes, range of sections from each and every head. Don't ask anything, just listen the class. Okay. And if you are asking the question continuously, how I can deliver the lecture? So if you want, listen. Otherwise, yes, you can ignore this class, no problem. Simply, continuously, if you are asking the questions, I am unable to give the answers to your questions as well as the delivery of the class. These two things one at a time not possible. Okay. Thank you. Now, how many heads of income we have? Nothing but we have 5 heads. The range of sections we have to know. Income from salaries will start with the 15 and ending with the what ma? 17. Just we have 3 sections in income from salaries, that is in 15, 16, 17 only. Now in income from house property we have in section 22 to 27. So in PGBP 28 to 44 we have. Next in capital gain 45 to 55. 45 to 55. Next yes, in other sources we have in 56 to 59. Sir, why we need to learn all these range of sections, sir? I will tell you simply. Yes. Suppose if any person having the 200 types of incomes, so you can aggregate that incomes for calculating the gross total income. But we have to segregate that all the incomes into different heads of income. So how we can classify that all the 200 incomes into different heads of income? By using the charging section under different heads. If you follow the every head of income starting section, clearly the charging section saying about what are the incomes are taxable under particular head. What are the incomes are taxable under particular head? That is only charging section. Now 15 is a charging section for salary, 22 is a charging section for house property, 28 is nothing but for PGBP, 45 subsection 1 for the capital gain, other sources 56. Now, sir, now our target to learn PGBP chapter. Yes, I will tell you everything means nothing but whatever that provisions are relevant for examination point of view, I will tell you. And I will tell you comprehensive questions also, 4 to 5 questions I will solve. And especially depreciation concept is important in ICMI point of view. That's why we can solve the questions on depreciation also, and most important comprehensive questions also we can solve. For solving the comprehensive questions, whatever the important adjustments are there, I will try to cover. Till evening we have a live session. Okay. So I hope all you are getting the clarity. So now I hope all you are getting the clarity. I will tell you in this chapter the most important provision for doing the comprehensive questions and depreciation questions also, and comprehensive questions I will solve 4 to 5 questions. Okay, depends upon time. Now, sir, main question, sir, heads of income is relevant for the CMA final examination. I can say we can get one question from PGBP. Definitely PGBP we have to learn. Next, sir, what about salaries and house property? Complete knowledge is not required. In tax planning chapter, I told already. Okay, if you are regular batch students or EVO batch student, I told some provisions relating to house property as well as salaries provisions for doing the sums in tax planning chapter. Yes, that basics and all the things we covered already in the chapter. Next, capital gains. Separately, we can't expect some questions from capital gain, but these are all the things we can use in the business restructuring and reconstruction chapter, but separately I covered capital gain also in our module. Income from other sources, the mainly for MCQ purpose we have to read. So now very important head of income in our CMA final syllabus, we can get 14 mark question also. What is that? PCBP. Now, you know already what is the charging section for PCBP? 28. What is the ending section for PCBP? 44. Okay, now I will start introduction. If you understood this introduction, you can able to understood the remaining concepts also in better way. Suppose A Limited is doing the business. Super. Company, remember, limited means company. Yes, they will prepare the, schedule 3 balance sheet as well as the P&L account. As per that, Companies Act 2013, schedule 3, they prepare the net P&L account. In the net profit is there. Can you tell me on the net profit, can I apply tax rate directly for calculating the tax liability? This is completely incorrect. What is the reason? Sir, this is profit as per Companies Act 2013, not as per Income Tax Act 1961. We have to take this net profit as a base for calculating the PCBP as per Income Tax Act 1961. So remember, what is a base we have to take? Base we have to take net profit as per Companies Act 2013. From that base, we have to arrive the Income Tax Act 1961 related, yes, profits and gains from business or profession. So on that you can apply the tax rate, you will get tax liability. Now, why we are learning this chapter, provision section 28 to 44, reason is how we can calculate the PCBP from the net profit. How we can calculate the PCBP from net profit. For this computation purpose, we have to use the section 28 to 44 provisions of an Income Tax Act 1961. So, in comprehensive questions, we have to follow this. In comprehensive question, definitely we have to follow this. So, in examination, always they will give you P&L account in statement wise as well as or account format they will give you. Mostly they will give you statement format. Okay. Suppose they given P&L account. Some incomes are already credited. Some expenses are already debited. And they will give you net profit. That means these incomes are already credited to the P&L account as per books of accounts, not as per Income Tax Act 1961. Okay. So incomes credited, expenses also what are debited. And they will give you some other information also. What is that additional information? Yes, certain incomes, certain expenses. Remember, these things are not covered in the P&L account. That means effect of these expenses, effect of these incomes not covered in P&L account. So this is only problem solving format. Some of the students will understood this now. Some of the student will not understood, no problem. If you understood, okay. Otherwise, now whatever I am teaching for 5 minutes, that means nothing but from net profit, how we are going to calculate PCBP. I have to use the section 28 to 44 provisions, right? So this application now maybe if you understood, okay, otherwise no problem. So at the end of the chapter, definitely you will understood while doing the comprehensive questions. Okay, now listen. So they given the P&L account, debit items, credit items, as well as other information also. Now they are asking the which income, PCBP income. Now what is the base I have to take for computing the PCBP? Net profit as per P&L account. This is only base I have to take. From this, I have to calculate what PCBP. For this purpose, we have to do adjustments. For this purpose, we have to do adjustment. What are the adjustments we have to do? I will tell you. First one. These expenses are debited. Example, two expenses are there. Rent, income tax. Because of these expenses, what is that effect on net profit? Reduced. But this effect we given as per books of accounts. But I have to check as per income tax provisions. As per income tax provisions, rent is also allowed. That means same treatment as per books also. Same treatment as per income tax record. That's why, so already we have to, already it is debited. As per income tax provisions also we have to do what? Debit only. So that's why, can you tell me, is there any adjustment is required for this? Not required. Second, income tax. As per your books of account, income tax is expenditure only. But as per provisions of Income Tax Act 1961, income tax is an personal expenditure. I will tell you, these are all the things in the provisions. Okay, income tax. Because of income tax, what happened? Net profit reduced. As per books, net profit reduced, but as per PCBP, that means income tax provision, it should be what? Disallowed. Because of this income tax debit, net profit reduced. Now, for calculating PCBP, I have to do what? Increase. How can I increase? That means if any expenditure, if in anything is disallowed. Allowed means do nothing. But if it is disallowed, already because of this debit, net profit reduced. Now I have to increase the net profit for computing the what? PCBP. Simply expenses disallowed treatment is what? If already debited to P&L, we have to add back. So now coming to incomes. Sales income. Definitely if any sales is there, it should be what? Credited. As per income tax also, you should credit it. So that's why no need to do anything, because income allowed as per Income Tax Act 1961 also. And already it is what? Credited. Do nothing. But if rent from house property is there, generally, as per your books of account, it is credit treatment. You have to give credit, you done. But remember, as per Income Tax Act 1961, it is taxed under separate head, right? What is a separate head? House property. What we have to do now? Now what we have to do? Please tell me. Simply we have to disallow. Because of this, net profit increased, right? Because of this, net profit is increased. Now what we have to do? We have to give the reverse statement. Simply incomes to be what? Disallowed. What is the treatment we have to give? Minus. Simple because of this credit item, net profit increased, but it should be taxed under PCBP or house property. House property. That's why please reduce from the net profit for computing the PCBP. So now these two items related treatment we discussed. If already considered in P&L, if expenditures to be disallowed, add. If incomes to be disallowed, add. Allowed means already it is considered, do nothing. Disallowed means expenses, add. Disallowance of incomes means minus. Here add and minus. Next. Allowance means what? Already it is allowed, do nothing. Next. Tell me, These incomes not considered. Its incomes are required to tax under PCBP, we have to add. Otherwise, ignore. These expenses are allowed means minus, and if these expenses are not allowed means do nothing. Because it is not considered in P&L, separately we have to apply the provisions of Income Tax Act 1961 28 to 44. If it is allowed means what ma? Add. If it is allowed means what ma? Minus for computing the what ra? PCBP. So incomes allowed what ra? Plus. Incomes allowed means what ma? Plus. Expenses allowed means what ma? Minus. Then automatically you will get what ma? PCBP. Now I will tell you, sir, how you can say it is disallowed, how you can say it is allowed. Yes, these are all the things we'll discuss in this chapter. Which expenses are allowed, which expenses are disallowed. These are all the things we will get in the provisions of this chapter. Now, so what are the sections we are going to cover in this chapter? The first one we can cover the charging section. So I will tell you two types of charging section here. 28 ma normal charging section. 41 is deemed profits. 41 is what ma? Deemed profits. Sir, normal charging section means if you are regularly doing the business or profession, certain incomes are taxable in the hands of SSC under PCBP. Okay. So that required to tax in this. Earlier year deduction you taken. Earlier year you taken deduction means earlier year PCBP reduced. Now I want to reverse the deduction. How can I reverse the deduction ma? Simply in this year I need to create the what ma? One income in the PCBP. So can I create the income under 28? No. Now I have to create the income under section 41. It is a direct charging section. It is an indirect charging section. Remember, if you are earning any income from your business or profession by way of doing business or profession, 28. Earlier deductions, earlier year expenses. Now I want to reverse. How can I reverse ma? Can I do time travel? Not possible. That's why now previously 1 lakh reduced. Now you can create the 1 lakh business income under 41. 29 ra, simply this computation, whatever we discuss at this computation, that is only section 29. Now, section 30 to 38, if you refer, you will get an idea about the what are that allowable expenditure. So, these are only ma, expenses allowed, yes ma, expenses disallowed. How we will get the knowledge about that? If you follow this section 30 to 38. Next section 40 to 43b. Many are saying disallowed. Okay. These are expenses are called as what ma? Disallowed. But in my view, yes ma, whatever these expenditures you want to take it as deduction, for taking the deduction, you have to satisfy some conditions. You have to satisfy what ma? Some condition. If those conditions are not satisfied, that is what ma? Disallowed. Example, while making the payments, please do electronically if the payment is more than 10,000. While you are making payment to the relatives, please pay up to fair market value only. Excess over if you paid, that is disallowed. And certain payments is allowed only on what basis ma? Actual payment basis. If you paid, yes, you can take deduction. On accrual basis, you can't get. That means these are conditions for the allowances. If conditions satisfied, allowed. Otherwise, disallowed. So remaining, I will discuss it as an what ma? Other provisions. This is only the overall view of the chapter. Listen carefully again. Just now, I don't want to teach the charging section now. I don't want to teach. But I will tell you just one overall view. Charging section 28 is saying that list of incomes. What are that ma? List of incomes. If you observe ma salary charging section, conditions they are saying ra. House property also 3 conditions they are saying. If these 3 satisfied, house property. Like, but 28 is given that, yes ma, points. Some incomes they given. These incomes are always taxable under which head ra? PCBP. 45 charging section also, you know, if it is a capital asset and if it is transfer, that is capital gain in a year of transfer. All charging sections are conditions point of view. If these conditions are satisfied, that income chargeable under respective head. But 28 is a special one, there is no condition, simply one list given. If these list of incomes are there in your hands, that is taxable under PCBP. So now, how many just we can refer? What is that also I don't want to know as of now. Can you tell me from point number A to from point number J? So simply 10 points they given. These 10 incomes are always taxable under which head ma? PCBP. So don't bother about it. If it is relevant for that exam or MCQ, I will tell you. Okay, in future if any necessity is there, we can do revision for this also. As of now, this is not required to remember every 10 points. Every point in this total 10 points, no need to remember. But every head of income required to follow one method of accounting. What is the method of accounting? Now PCBP head required to follow method of accounting given in which section? 145. So clearly they are given an option to SSC only. You can follow cash or accrual. Accrual other name mercantile. You can follow cash or mercantile, but please follow regularly. Whichever you want, yes, you can follow. Either you can follow cash basis or accrual basis, but please follow everything regularly. Done now. So then I will maintain the list of section numbers. The reason nothing but while doing the comprehensive sums, it will be crucial. Yes, that's why I will maintain the name of the section numbers. So try to tell me section 28 we started. What is that? Charging section. Super. Charging section. Section 29 also started. Okay, we discussed. What is that? How to compute the PCBP from the net profit. I think you know, if an expense is already debited to P&L, if that is disallowed, what we have to do? Add. If incomes already credited to P&L, if that is required to be disallowed, what we have to do? Minus. If expenses are not considered in P&L, if expenses are what? Not considered in P&L, if that is required to be allowed, what we have to do? Minus. If incomes are not considered in P&L, now if it is allowed means what we have to do? Add. This procedure is given in what? Section 29. So computation of PCBP by using the provisions under section 28 to 44. So now, so here one more provision we discussed, that is what? Section 145. Yes, every head of income related, which method of income we have to follow, method of accounting which we have to follow, that clarification given in this section, method of accounting. So next, we have to start the now 30 to 38. So what is that 30 to 38? Very important allowances. In order to do the questions also, definitely we need to know the provisions of what? 30 to 38. Now first I will go with the 30. First I will go with the 30. Listen carefully, listen carefully. I will not repeat 4 or 5 times like a regular, just listen. If any building is used in our business or profession, if any building is used in our business or profession, definitely I have to incur certain expenditure for that building, right? Okay. How we can use the building in our business? One is I can use it as an owner, because I am only owner of the building. Now I am using that building in my business. Second, yes, I don't have any building. Now I can take the let out and I can use it. That is used as an what? Tenant. Remember, anyhow, yes, whether you are using as an owner also, you can take that expenditure as a deduction. You can use it as a tenant also, you can take it as a deduction. But deduction permission given in which section? 30. Section 30 always concerns about the buildings which was used in our business or profession. Now, listen. Which expenditures we can take it as deduction? If you are an owner, you can claim depreciation on that building because you are using one asset in your business. On that you can claim depreciation. How to calculate depreciation? I will tell you in 32. But if you are using as a tenant, you can claim what ma rental expenditure because owner only can claim depreciation ma. So now if you are tenant, what is that main expenditure for you with respect to the building? Rent. So remaining revenue expenditures, you can claim it as deduction. If you incurred any capital expenditure, you can't take it as deduction, but that capital expenditure always will be added to the what asset cost. So if asset cost is increased, no problem. On that asset cost, we can claim what depreciation. So depreciation also allowable expenditure under which section? 32. My revenue repairs, if you done totally, you can take in the year of incurrence as a deduction. In the year of incurrence, you can take that amount as a deduction. Now, capital expenditure, if anything is there, that capital repairs or capital expenditure should be added to the asset cost. On that you can claim depreciation. Now depreciation also allowable expenditure, what ma 32. That means revenue repairs or revenue expenditure directly you can take it as deduction. Capital repairs or capital expenditure directly you can't take, but indirectly in the form of depreciation you can take it as deduction. These points are enough. Remember 30. If I am saying 30, you have to remember building. My building used for personal purpose, can I take deduction? No. Building, if it is used for business or profession, can I write it down charging section number 4. Why I given the gap between? Because I started the allowances now. Because now I am starting the what allowances now. Clear? Section 130, what is that expenses with respect to buildings used in BRP, business or profession. Sir, in business or profession we need to use only buildings. Okay, can you tell me some examples other than buildings which we can use? We can use plant and machinery, furniture. Or in our institute, we are using building as well as we are using furniture also, some machineries also. Yes, that all the things related also, we have to incur what expenditure. That expenditure you can take it as deduction under section 31. Same point. You can use these all the things as an owner, or the same things you can use it as an tenant. So if you are using as an owner, you can claim depreciation. If you are using as a tenant, you can claim expenditure is what for you? Rent. That rent you can take it as deduction. Here also same revenue repairs directly you can take it as deduction under 30-31. 30-31 directly revenue repairs you can take it as deduction. But capital repairs will not be allowed as deduction, but depreciation on that the capital repairs is allowed. That means anyhow you can take deduction, but indirectly capital repairs allowed as deduction in the form of what depreciation. So now I will write it down next section. Please tell me what is the next section? 130. Sorry, this 30 how you written 130? Okay, section 30. So section 30 is over. Now section 31. So please tell me expenses relating to plant and machinery and furniture. These things are used in what? Tell me. Used in business or profession? Used in business or profession. Understood? Now, so next one. 38, sir, you are not going in an order. No. But I will tell you 38 first. It is very important. Yes. If you are using any asset or if you are incurring any expenditure combinedly for that personal as well as business. If any expenditure you are incurring combinedly for the personal purpose as well as business purpose, you have to take the complete amount of deduction in PCBP or proportionate amount of deduction. Example, I'm taking this entire building for rental basis. I'm paying rent how much? 30,000. But out of that, 50% I'm using for self-occupation purpose, 50% I'm using for business or profession. That means now I'm using this building 50% only, right, for my business. In the books of accounts of business or profession, how much I can take deduction? 30,000 or 30,000 into 50%? 30,000 into 50%. If any asset or if any expenditure used partly for personal purpose, partly for business purpose, proportionate part of expenditure related to business or profession. Can you tell me what is a proportionate part? 50%. Understood? Now tell me what is a 38? So it is a common section. If any expenditure incurred for the business as well as the personal purpose combinedly, we can take the proportionate deduction. So nothing but proportionate deduction. Done. So now, so we have to start the depreciation, and I will tell you everything about the depreciation concept because we have depreciation in our final syllabus. But in which concept? Business restructuring chapter. In business restructuring chapter, we have a depreciation concept. Occasionally, okay, some cases they are given the depreciation question also in an exam. So we have to understood depreciation clearly. Shall we start? Yes. Ma, in India, you know, some of the areas will be called as what, ma? Special economic zones, because underdeveloped areas will be classified by the government as a special economic zone. That is simply called as what, ma? Tax haven jurisdiction. In that locality, if you earn any income also, no need to pay the tax. So other than this, says is called as what, ma? DTA, domestic tariff area. That means in these areas, if you are doing business, you have to pay the tax as usual. Now, so what is that benefit you can get if that entity located in special economic zone, ma? Yes, if any entity located in special economic zone, yes, you can get section 10AA deduction. What is a 10AA deduction? First 5 years, 100% days of export profit, you will get deduction. My export profit means simply from India to outside India export, from cess to DTA also export. Export means what, ma? Cess to outside India. Cess to DTA also. That means within India, you are transferring from the cess to DTA. That is also what, ma? Export. Whatever the profit you got, that export profit 100% you will get deduction. Next 5 years, 50% of export profit deduction. Next 5 years, 50% of export profit or amount invested in SEZ reserve. That means again I want to do the business expansion I want to do, or again I want to do the business in SEZ. For that purpose, you can maintain one account. In that account, if you invested some amount, we can compare these two. Whichever is lower, you will get deduction under 10th year to what, ma? 15. That means in these 5 years, whichever is lower, you will get deduction. Now, in our case, Mahindra Mills Limited, practical case, Lara, it is located in where? Special economic zone. They purchased plant and machinery with a 1 crore. What is the depreciation rate on the plant and machinery? 15%. What is the depreciation rate on the plant and machinery? 15%. Remember, so you know, first year what is the depreciation? 15 lakh. But they are filing the return of income without claiming the depreciation first 5 years. Can you tell me the reason? Already we can get the whatever the profit we got, that is increased also because of non-claiming of depreciation. Our net profit is what? Increased. Even though if it is increased also, it is not a problem because 100% of export profit we can get what, ma? Deduction. So that's why intentionally they are not claimed depreciation first 1 to 5. In the 6th year, they started claiming of depreciation. Now net profit is reduced. So department is saying that how you can stop the depreciation from year 1 to year 5. You are using your asset in your business, right? You have to claim depreciation mandatorily, they are saying. But Mahindra Limited is saying that there is no provision of the depreciation, there is no provision regarding the depreciation claiming is mandatory. So that's why whenever I want, I can claim depreciation. That point is raised by the Mahindra Mills Private Limited. So court also given the judgment favorable to Mahindra Mills Private Limited only. In order to nullify this treatment, so next year they made an amendment. What is that amendment they made? Depreciation. Now they are saying what mandatory to claim. So why they are given? In order to nullify the whatever the judgment given in the Mahindra Mills Limited case. Understood? Tell me now. Yes. Yes, ma. Now live is available. You can check. Yes, please give me confirmation. Now, if you have an power sector undertaking company, yes, you have an option to claim depreciation either by using the WDV method or what SLM method. You can follow whatever the method you want. Yes, if it is WDV method, how we can calculate depreciation block wise? So that means group of assets we have to do on that group wise only we can calculate depreciation by using the WDV method. But if you are following the SLM method, we have to calculate depreciation on what each and every asset wise separately. Each and every asset wise separately. Understood? Now, so depreciation generally except power sector undertaking company, how we can calculate block wise? Except power sector undertaking company, you have to follow block wise. So block wise means which method we have to follow except power sector undertaking company WDV. Sir, nothing but in Income Tax Act 1961 WDV method only there. And what is that wise? Block wise. That means all the assets we have to classify into groups. On that group we have to follow the WDV method. But power sector undertaking company only can follow whatever that option they want. If they followed this, okay. If they are following this also, okay. Understood all of you? Please tell me now. Now, sir, how to classify the block of assets? Sir, in our organization, 500 assets are there. Example. If an assets having the similar nature and if assets having the same rate of depreciation, if both the conditions are satisfied, now that assets we can classify into one group. Remember, if any assets having this similar nature, I will tell you what is a similar nature. Okay, after some time I will tell you similar nature and rate also. Same nature, same rate of depreciation we have to classify into block. And remember, this is very important. How to classify the assets into blocks also we'll discuss. But remember these points of condition, similar nature, same rate, both are satisfied, we can classify the assets into block. How many types of depreciation is there? Okay, normal depreciation. Some cases normal depreciation is reduced to the extent of 50%. That is only called as what reduced. Some cases, that is in case of manufacturing cases, we can take the additional depreciation also. and we have unabsorbed depreciation, and we have an terminal depreciation. These are all our types of depreciation. We can discuss everything also. Now, first thing, what are the conditions for claiming depreciation? So, if you want to claim the depreciation, you have to satisfy how many conditions? Two. First condition, you must be the owner of the asset. If you are an owner, then only you can claim depreciation. Okay, Ra. For my residential house, I am only owner. Can I claim depreciation? No. That asset must be used in for business or profession. What are the two conditions, ma? Please tell me. First condition is SSE must be the owner. Second condition, you must use it that build any asset for business or profession. If these two conditions are satisfied, now SSE can claim the depreciation. So that's why he can follow WDV method, and which wise? Block wise. Now how to classify the assets into blocks? Now we can discuss. Yes. So now, these two conditions, please remember, these are basic points. Now, uses may be active use, passive use. Simple example. Okay. Now, I am using camera, laptop, tab, and all the furniture in the class. That is called as what? Active use. We have a generator, power generator. So can you tell me, regularly I will use actively that asset in business? No. I am keeping that asset for some cases if power goes off. Second, fire extinguishers are there. These are all what kept ready for use, but we don't have any intention to use regularly in our business. These two things remember. If it is an active use also okay. If it is passively used also okay. Now you have to remember one more point. So once these two conditions are satisfied, now we have to calculate depreciation. We can follow the WDV method blockwise. Blockwise means how to classify assets into blocks, similar nature, same rate. Now, nature of assets. Now I am discussing whatever the assets we have in our organization, all are first you can classify into one type. What is that? Tangible. Second type, intangible. Tangible you can classify into three types: building, furniture, plant and machinery. Sir, building and furniture specific points, specific categories. If any asset not having the place in these categories, you can classify into where plant and machinery. So example, books, plant and machinery. Ships, aircrafts, plant and machinery. Molds, plant and machinery. Yes, any machinery, plant and machinery. So remember, if any asset doesn't have any place in these three categories, that asset we have to classify into plant and machinery. In plant and machinery, we can exclude what? Livestock as well as tea bushes. On this, we can't calculate what? Depreciation. Now, intangible means examples, know-how, patents, trademark, franchises, copyrights, all the things. But here I am ignoring the and I am removing the what? Goodwill. Goodwill is not a depreciable asset. Remember, goodwill intangible asset only. But on goodwill can I claim depreciation? No. Other than goodwill, if any intangible assets are there, we can claim depreciation. Understood? How many nature of assets? Building, furniture, plant and machinery. Yes, intangible asset. From intangible I am excluding the goodwill, right? From tangible also I can exclude land. On land I cannot calculate the depreciation. Understood all of you? Nature of asset means 4. Now for these things I will explain you the rates of depreciation. Many students are taking this as a difficult thing. This is a very easiest thing. I will tell you. Intangible assets related only one rate. Close this issue. What is that? 25%. MCQs also very important. Intangible related 25. Furniture related single rate 10. It's over 2 categories already. 2 nature of assets related depreciation we understood. 25, 10. Furniture including fixtures. Furniture including fixtures. How much ma? 10%. Now we'll concentrate on the buildings. Yes. Buildings used for water supply project. Nothing but in our villages, water supply projects are there, water tankers, irrigation projects, etc. That buildings, we can claim what is the rate? 40%. Our temporary constructions, wooden constructions are there. On the type of buildings, we can claim what? 40%. Remember, if any buildings are used in water supply, if any buildings are used in temporary constructions or wooden constructions, if any building constructed by using the temporary or wooden, 40. Remember, commercial buildings. That means now commercial building only we are taken as a renter. Owner can claim depreciation on commercial buildings 10%. If in exam, if they are not mentioned anything, just they given building, general rate is how much? 10%. Sir, residential buildings, tell me, residential means how you can claim depreciation? Ma, if it is residential, how we can claim depreciation? You already told one thing, we have to use for what purpose? Business or profession? Now I will tell you, in some colleges, we have an hostels. Hostel building, we are using in business or profession only. But for what purpose? Students, residential purpose, right? Employee quarters, etc. That building used in business only. For what purpose? Residential. Example, hostel buildings, as well as what? Employee quarters, etc. That is called as what? Residential buildings. Usage is very low. That's why 5%. So buildings, how many rates? 3 rates. Closed. Buildings, how many rates? 3. Temporary construction, water supply projects related 40%. Commercial buildings are general cases 10%. Yes, residential buildings 5%. Next. Now we have to concentrate on the plant and machinery at most. Yes, remember, motor cars. Here also motor vehicles, remember. Mom, I am using my car in my business. I am using my car in my business. Here, one type. Second type, I will tell you. Yes, sir. I am running in business of goods transportation. That means nothing but the vehicles transportation. Always I am given the cars on rental basis. In which case, wear and tear is very high. So, transportation. So, transport operator cases. Sir, if I have my asset in my business, that vehicle, I will use properly. If I am taken from others, I can use in any way. So that's why clearly, yes ma, if that assets are used in the business of running them on what ma? Hire. That means now SSC using cars, motor vehicles, in which business ma? Hire business. Now, wear and tear is very high. So that's why they are saying, please take depreciation 30%. Remember, acquired and put to use must be done on or after this date. Sir, that means this is a standard date. Before that date, if you purchase it, means that is now considered as a scrap. On or after this date, if you purchased and put to use is done, now you can claim depreciation at the rate of 30%. Remember, it is which business ma? Higher business related vehicles. So now, motor vehicles other than hire. So it is my own vehicle I am using in my business. Other than used in the business of running them on hire, here wear and tear is somewhat low. So that's why we are restricting depreciation to 15%. Here also same condition, acquired and put to use on or after 1/4/1990. On or after 1/4/1990. Understood? Higher business 30%. Other than higher business, motor vehicles 15%. Now, remaining this category, remember C category, aeroplanes, aero engines, life-saving medical equipments, example oxygen concentrators, etc. Computer including computer software, remember, computer including computer softwares also. Air pollution control equipment, energy saving devices like what? Power generators, inverters, etc. Books including professional books, oil wells. On all these things, we can claim depreciation how much ma? 40%. Remember this category, ma first we discussed the vehicles ra. So own vehicles 15%. Hire vehicles related. If I am using vehicles in my hiring business, what is that? 30%. So next category, I given some assets. Remember computer also included here 40%. Molds ma 30%. Ships and vessels 20%. So molds means nothing but in factories we have yes, some shapes are there. If you are poured that liquid into that shapes, you will get the what ma product. That is only called as that shapes only called as what ma molds. Simply, yes, what is the depreciation? 30%. Ships related 20%. Windmills before this date installed 15. On or after this we can claim what ma 40. Before less amount of depreciation, right? If you install recently, if you install, what is that? 40%. If they are not saying anything, just they are saying plant and machinery, what is the general rate? 15%. You can see already in Mahindra Mills, I taken the plant and machinery general rate how much ma? 15. So easy thing, right? Depreciation rates are not difficult, but you have to classify how we can learn. So can you tell me in plant and machinery how many rates are there? First 15, then 30, then 40, 20 also there, 30 also there, here 40. There is no 45%. There is no 45%. 15 is there, 30 is there, 40 is there. Yes, 30, 20, again 40, 15, 15. So now you know nature, rate also you know. Same nature, same rate, we have to classify into block. Now tell me, I given the 8 assets. I given the how many assets ma? 8 assets. Please tell me, I only given the rate. Sir, in exam also they will give the what ma? Asset name, rate they will give. You have to identify the what nature. This is we identified. Can you classify the nature ma? Computer, plant and machinery, right? Car, plant and machinery. Books, plant and machinery. Furniture, building, intangible asset, intangible, building. Now, same nature, same rate. Tell me, this is same nature, plant and machinery. What is the rate ma? 40%. Can you identify the same plant and machinery? 40%. Is there any other? No. Now, same nature, same rate, same nature, same rate. Now, we can classify these two assets into one block. That means asset number 1, asset number 3, we can classify into one block. What is the block name? Plant and machinery 40%. How many are over? This is over. This is also over. Now, tell me, next plant and machinery 15%. Plant and machinery 15%. Can you tell me where we have another nothing is there? So that's why it is only what ma? Separate block. What is that? Second one. So next nature, furniture. Is there any other nature and other etc.? No. So that's why it is also what ma? Separate block. Furniture, separate block 4. Next, remember, building 5%. Building 5%. Same nature, same rate. Yes, we have. So that's why, yes, same nature but different rate, right? This one. So that's why building, same nature, same depreciation rate. Same nature, same depreciation rate. That means building 5, building 8. That means these two are one block. These two are one block. Next one, yes, what are the remaining are there ma? Building 10%, one block. Building 10%, one block. Intangible asset what ma? Another block. So totally here we have how many assets? 8 assets. Now we classify the 8 assets into what ma? 6 blocks. So now you understood same nature, same rate. If you got, you can classify that assets into the same block. All of you, I think you understood the how to calculate the blocks, how to classify the assets into blocks. Now, after classifying the block, you know, in our organization, just example, I am taking I classified that assets into how many blocks ma? 3 blocks. How many blocks? 3 blocks. Sir, like unsown blocks also will be there because everything, the number of blocks will be more also in some cases. Just I taken for example purpose how many ma? 3. Yes, blocks we know. Which method we have to calculate? Depreciation, WDV. So that's why already if you assets classified into block wise, now we have to calculate depreciation by using which method ma? WDV method. So that's why I have to discuss the WDV format under which section? 43.6. Very important. Section number please remember. WDV format under which section ma? 43.6. In 43 subsection 6 PGBP chapter only 43 section. In that they given the WDV format that I will tell you. First, please concentrate on block 1. Opening WDV. That means these assets are from the last year. Means what? Old assets. How many are there? 10. What is the value? 1 lakh. During this year, I purchased some assets. How many assets I purchased? One asset I purchased. This during this year, if you purchased means these assets are what? New asset. Simply, if any asset in opening WDV, old asset. If any asset in cost of additions, that is what? New asset. Can you tell me what is the value? 60,000. What is the value? 60,000. Now, totally how many assets in block? 11. What is the value of the block? 1,60,000. During the previous year, I am selling one asset. Sorry, I am selling how many assets? 9. 9 assets I am selling for how much? 2 lakh. Okay, one bakara found. So 1,60,000 worth only in your books as an WDV, but you sold this for what? 2 lakh. Now tell me, if you sold any asset, even first day, middle, last, anytime during the previous year, if you sold that asset, please reduce from the block, because on that we can't calculate the depreciation. Very important point. Again, I am repeating. If you sold any asset from your block, on that we can't calculate depreciation. Sir, we are selling this on the last day of the previous year. No problem. Reduce it. Now tell me, how many assets are there? 2. Because 10 plus 1, from that we sold 9. But what is the value? Here you have to put the negative value, but you can't put the negative value here. That's why we can take nil. If value is there, I can calculate depreciation. Here there is no value. So that's why, can I calculate depreciation? No. So simply this block is discontinued from our business. One depreciable asset is discontinued. So now we have to calculate what? Capital gain. Because we are selling this block entirely. This is a depreciable, non-depreciable? Depreciable. Now you have to calculate what? Capital gain. Remember, you have to calculate depreciation. For depreciation, at least one asset must be there. Here one asset is there. But at least one value also required to be there. Value means positive value. If not satisfied, then we have to calculate capital gain 50. What is this 50? Depreciable capital assets related capital gain. So that's why I can conclude one point here. 32 and section 50 are mutually exclusive. Here depreciation absent. So that's why which one will present a capital gain? So now second example I will take. Second example. Listen. How many assets are there opening? Old asset 15. What is the value? 1,50,000. Newly I purchased how many assets? 5 assets, 50,000. I sold every asset for how much amount? 90,000. So is there any assets in the block at the end of the year? No. But value is there. Without having the asset, if value is there also, can I calculate depreciation? No. If you are unable to calculate depreciation, what is the meaning? We are selling this entire block to others. So now we have to calculate what? Capital gain. Whenever depreciation is absent, on that occasion, we have to calculate what? Depreciation. Sorry, whenever we have whenever depreciation is absent, we have to calculate what? Capital gain. Last block we can check. That means these two blocks discontinued and we are required to calculate capital gain. Last block. How many assets we purchased? 5. Sorry, how many assets from old year? 5. Value 50,000. One asset I purchased. 3 assets only I sold for how much? 20,000. What are the balance? What is the value? 40,000. Remember, asset also will be there. Value also will be there. Now can I calculate depreciation? Yes. On this depreciable value, please calculate depreciation. Please tell me, what is that? 25% into 40,000. How much, ma? 10,000. Finally, what is that? 30,000. Sir, here depreciation is present. So now, can I calculate capital gain under section 50? Here, depreciation is absent. Here also, depreciation is absent. So now, what I require to calculate immediately, if depreciation is absent, section 50 capital gain. Here also, section 50 capital gain. Here, it is present. That's why it is absent. So that's why these all things are called as what? Mutually exclusive. So I hope you understood everything. Now we know in these cases we have to calculate capital gain, right? Now how to calculate capital gain I will tell you. In which blocks we have to calculate capital gain, ma? Block 1, block 2. What is that? Block 1, block 2 also I given the heading. Simple, reverse of this format. Sale consideration, this is only cost. Sale consideration, this is only cost. Simply, this is a cost to us. We sold for 2 lakh. Profit or loss, ma? Please check it out. 2 lakh minus 1,60,000 profit. That's why it is a short-term capital gain. Why short-term capital gain, sir? Because these values are already marked to market to every year because of wear and tear. Okay, whenever that wear and tear is there, we reduce the depreciation. That value is marked to market. That's why section 50 resultant incomes always short-term capital gain or short-term capital loss. Remember, here also we have to do the reverse. Sale consideration 90,000, but we purchased it for what, ma? 2 lakh. How much loss, ra? 1,10,000. Short-term capital loss is how much, ma? 1,10,000. Amma, understood all of you? So now if you observe, we just started the depreciation. So methods of depreciation, in power sector we have an option. In power sector we have an what, ma? Option. In normal other than power sector, WDV method, blockwise. How to classify block? How to classify how to calculate depreciation? How to classify the assets into blocks also we discuss. Conditions for claiming of depreciation also we discuss. Now, normally this is how we can compute the depreciation. But what is that? Reduced depreciation. Normal depreciation concept is over. Now we have to start what, ma? One more type of depreciation, reduced depreciation. What is the concept? Reduced depreciation. Shall we? Now, sir, reduced means normal depreciation, on this depreciable value, we calculated full rate. That means whatever the 25% is there, on this value we apply. But now, please calculate depreciation 50% of normal depreciation. That is only called as what, ma? Reduce. When, ma? If these two conditions are satisfied. First condition, if you purchase the asset newly. Newly means what, ma? If you purchased any asset during the previous year, and if that asset used for business or profession, that is put to use less than how many days, ma? 180, not less than or equal to less than 180 days. That means if you have a new assets, means what, ma? If you having any asset in cost of additions, and that too if that is used less than 180 days, then only there is a concept of what, reduced depreciation. Now, first year, 180 days less we are used. Then, can you tell me what, ma? Reduced depreciation. First year we used more than or equal to 180 days, full depreciation. Here off, here what, full. Second year, on such asset, always full depreciation. May I know the reason, For second year, that asset will become old asset. For the second year, that is what ma? Old asset. Or simple ra? Ma, this is only one question I am taken from CA intermaterial, section 32 and 50. That means section 32 and section 50. What is that ma? Depreciation versus capital gain on depreciable capital asset. You can easily understood this on your own. Just refer this question in your free time after the class. Okay. Now, sir, in this WDV format, this value we taken from the what ma? Earlier years. But this value we are required to calculate and for what cost we acquired the asset. So that we have to substitute here, right? So now I will discuss about the what is that? Cost of addition. Shall we start cost of additions point ma? Yes. Listen, next concept in this, definitely you have to solve the depreciation in WDV format. Opening WDV we can take in from earlier years. But cost of additions, yes, in general case and in special case. In general case means asset acquired by the SSE from other person. That means I am only purchasing from other person. Then at what yes cost and how I will add this, how much value I will add it to this what ma? Block. Okay, I am purchasing 1 lakh plus taxes and the transportation, all the things are there. What are the things we have to include for calculating this and how much we have to substitute in the WDV format, you should know. Now we can start the, if an SSE acquired that asset directly, general case, that is only we can call simply general case. Tell me the cost of asset. For that, taxes please add when you have to add taxes. If it is not recoverable. If ITC available, don't add. What is it cost? Okay, if that is not recoverable, cost to you. That's why add. If any ITC available, SENVAT credit is available, don't add. Loading charges. If any asset you are purchasing, you have to load that asset into yes, any vehicle for transportation. Loading charges. Next one ma? Unloading charges. In between these two we have to do what ma? Transport. Installation charges. Insurance premium. These are all the things we have to add it to the asset cost, because for purchase of this asset, in connection with the purchase, we are incurring these expenses, right? Example, I am purchasing one plant and machinery from Mumbai. I am paying taxes. ITC is not available. Please add that 1 lakh. So from Mumbai, I have to ship that plant and machinery to Hyderabad through vehicle. So that's why please load that vehicle, load the asset into vehicle. Transportation. Here, after reaching to Hyderabad, I have to unload the plant and machinery. Then after that plant and machinery, I have to install. Yes. For that protection purpose, I am taking the insurance policy. Every year I will pay insurance premium. These are all the things I have to take. Yes, finally, what I will get. And one more thing also. If any subsidy or grant is given by the government, so definitely that will be reduced from the cost. Next, very important. If I am taking loan for purchase of asset. If I am taking any loan for purchase of asset. From the date of borrowing to first put to use, if any interest is there, that interest should be capitalized, right? I think as per your accounting standard also you follow the same treatment. Up to first put to use, if any interest is paid regarding that acquisition of asset, that must be capitalized. So that is also we have to capitalize. Up to first put to use. After first put to use, what we have to do? Yes, that is revenue expenditure. In section 36.1 we can take. I think after some time we can go to this section. Within this section we can take what ma? Deduction. Ma understood? Section 36 subsection 1. So if any loan is there, on that loan, if interest is paid, then that loan taken for what? Purchase of asset. Up to first put to use. Capitalize. Next, finally, you will get what? Cost of asset. This cost of asset only we have to substitute where? In WDV format. In WDV format. Now, listen carefully. Sir, if you purchase directly from others, okay. In some special cases, if you got asset in your business, sir, what are the special cases? Many are there, but I will tell you some special cases only. Yes, I will take that first special cases, whatever I want to teach. First one. Yes, ma? First one. Fourth one. Fifth one. These are next also. Sixth one. Seventh one. So these are the special cases. Amma, I am not acquiring this asset. I am not at all acquiring this asset. That asset is acquired indirectly by the SSC in his business or profession. So what are the special cases? I will tell you. Before going to the special cases, one note point. Ma, for acquisition of asset, we incurred certain expenditures, right? Please check whatever the expenditure we incurred while you are making the payment for this expenditure. More than 10,000 if anything is there. If you are making a payment or aggregate payment to a person in a day, if that exceeds 10,000, they are clearly saying please pay this ways only. Please pay that payment in this ways only. Other than if you are doing, what will be happen, ma? That expenditure is not forming part of actual cost. If it is not an actual cost, you can't claim the depreciation on that also. Clearly, this is only your 40A subsection 3 provision. While you are making the payments from your business or profession to a person in a day, single payment, single. If multiple payments you are doing in a day to a person, then we have to do what, ma? Aggregate. If that exceeds 10,000, what we have to do? Please pay in these ways only. What are the prescribed modes, ma? Remember, account pay check. Remember, account pay check, account pay demand draft, electronic clearing system, RTGS, NEFT, IMPS, etc. Any other electronic mode? Can you tell me what is that? Any other electronic mode? So nothing but BHIM, so phone pay, Google Pay, etc. electronic modes only. Very, very important point. Cross check. It is not an electronic. Yes, cross check. Now in exam sometimes they will give bearer check also. These things are not an electronic. It is equal to be treated as what, ma? Cash. Bearer check, cross check. Clear? Ma, if you are making a payment to a person in a day, single payment, single, aggregate, please check. If it is less than 10,000, you can pay in whichever mode you want. But if that is more than 10,000, please clear in electronic modes only. 4 electronic modes. What are that? Account pay check, account pay demand draft, electronic clearing system, any other electronic mode. Now, special cases. Here we are not purchased. We are shifting that asset from the specified business or scientific research business. You know, in these businesses, asset related, how much deduction we can claim? 100%. We purchased asset, but already in these businesses, we can claim how much expenditure as a deduction? 100%. Now in there, in scientific research business, in specified business, what is that cost we recorded for that asset? 0. Why? Already we claimed 100% of that cost as a deduction. Now, if it is brought into the normal business, please tell me, if it is brought into the normal business, we have to record it as an what? Actual cost. Actual cost, how much? Nil. That means in our block, if you want to add, yes, how much I have to add? 0. Why? Because it is used for scientific research. If it is used for Specified business, already we claimed 100% of deduction. That's why cost is 0 on that time. Now also, if that is bringing to the normal business also, we have to put it as an 0. So like our marks, second special case. We are not purchased. Here, subsidiary company, how the subsidiary company got asset? Holding company given the asset to subsidiary. How holding company got the asset? Subsidiary company is given the asset. If these two conditions are satisfied, what are the two? This relationship is wholly owned subsidiary, wholly owned holding company. Second condition, here who is a recipient? Subsidiary. Here who is a recipient? Holding. Recipient company, if that is an Indian company, and these companies are wholly owned subsidiary, wholly owned holding companies, then we have to take, remember, actual cost as an what ma? WDV to the transferor. In their books, as per income tax, what is a WDV is the written down value. That means we purchased it for 10 lakh. After claiming the depreciation, now value is 3 lakh. It is only called as WDV. In the hands of holding company, what is a WDV? 3 lakh. In the hands of recipient company, we have to record with the Voltra WDV. Transferor company, here holding company, here transferor company, subsidiary company. What are the conditions? Please check 100% holding and subsidiary. Recipient company must be Indian company. In such cases, we have to record in the hands of recipient and then WDV of transferor company. Same point in case of amalgamation also. Can you tell me who is an transferor? A Limited. A Limited will give the 100% assets and liabilities to the B Limited, right? You know, section 2(1)(b) amalgamation condition, 100% of assets and liabilities we have to transfer. Here they transferred, but recipient company at what value they have to record? WDV to the transfer. So that means 5 lakh is WDV to them. So now that is only we have to record. Understood all of you? Please. Next one. Demerger also same. So what is a transferor company? A Limited. They are transferring some assets to B Limited. Who is a transferor? A Limited. Now whatever the WDV is there for the demerged company, that is only cost we have to record for the resulting company. Up to now everything is easy. If you observe, holding to subsidiary, amalgamation, demerger, same line. What is a WDV to the transferor? Unspecified business asset and scientific research business asset, if brought into the business, at what cost we have to record? 0. Clear? Now, online. Yes. So please give me information about now you are following it or not, or if you have any issues like in audio and video, please let me know, then I will proceed. All of you please tell me, ma. So if you given confirmation, then I will proceed further. Yes. Now, this is a very important point for MCQ, and some students asked in the Telegram groups also. Listen. Ma building now we are brought into the business. Earlier this building used for what? Ma personal purpose. Example. So you purchased this on this date. Which year, ma? 23-24. Now you use it for personal, means self-occupied purpose. Now you want one building in business. So that's why you brought into that business, building in business on which date during this year. So now whenever it is entered into our business, we have to record in our books for claiming depreciation. Nothing but in block we have to record cost of additions. At what value we have to add? Simple. Actual cost of the building is nothing but how much ma? 10 lakh. What is that actual cost? 10 lakh. Ma, you know already 2 years back we purchased, now we brought in. Remember, you have to reduce the depreciation. But sir, how I can reduce the depreciation, sir? Because it is used for personal. No problem. That's why please reduce the notional depreciation. 23-24. You purchased on December means less than 180 days, right? So that's why please take the half of depreciation. Sir, many students are asking, sir, it is residential, sir. I can take 5 only, 10, right? But in clearly act, they given the clarification. In this case, notional depreciation 10%, not 5. Maybe you can say, sir, it is used for residential, sir. Residential means 5%. No. Don't use that. Here they are clearly saying general rate. Notional depreciation for next year. Can you tell me next year we can claim what ma? Full. So what is a WDV? After claiming notional depreciation, closing WDV, next year it is only opening WDV. So that is only actual cost is WDV. So now in this year, who can calculate depreciation? Ma, seller or buyer? Buyer. Seller will discontinue. Buyer will. Seller and buyer is one and the same. But now you can claim depreciation. Can you tell me what is the rate? General rate. But you purchased on which date? December. That means half only. Oh, yes, depreciation is nothing but what ma? 1/12/2020. Now here you can claim what ma? Depreciation fully because it is an which asset? Old asset. Ma, very important this remember. Because if it is newly purchased asset, you can calculate depreciation less than 180 days means after. This asset already you purchased in earlier years. Now that is brought into business. That asset is what ma? Old asset. Don't forget this. It is very important point. You can get this anytime in an exam. Sir, car is any other asset. If any other asset purchased and that is brought into the business, actual cost only we have to record. Any other asset, car purchased, previously used for personal purpose, now brought into the business, at what cost ma? Actual cost only we have to record. For which asset they given the liberty to reduce the notional depreciation? Building only. If building brought into the business, earlier used for personal purpose, reduce the notional depreciation and you can record it in WDV. But if that is any asset other than building, actual cost only directly you have to record. Suppose car 10 lakh, now you have to record here at what? 10 lakh. Don't reduce notional depreciation. Notional depreciation provision is given only for buildings. Clear? Sir, here why we applied full, sir, even though you acquired less than 180 days in this year, you use it for less than 180 days also. It is which asset? Old asset. If it is new asset, put to use less than 180 days, then only you can claim 50%. Clear? Now, sir, special cases also over. What is that, ma? Special cases also over. Now I will tell you additional depreciation. Quickly I will tell you additional depreciation. Remember. As of now, we discuss a normal depreciation, WDV format also, and we discuss reduced depreciation also. Actual cost, that means cost of additions, how to calculate in general case, in special case also. Additional depreciation, can you tell me why we need to provide the additional depreciation, ma? In manufacturing field or in generation and distribution and transmission of power, usage of plant and machinery is very high. So that's why, ma, building usage is same. In manufacturing sector, in power sector, which assets we are using regressively? plant and machinery. So that's why you can claim depreciation in this case on which asset? New plant and machinery, not older. If you purchase it during that year, on that you can claim what ma? Additional depreciation. Ma, very important point for your exam purpose. New plant and machinery excludes what and what? Second hand. If any asset used in India or outside India already, ma, for you it is an new only. But already some other used in India or outside India. So on that they cannot give additional depreciation. Second one, if plant and machinery installed in, can you tell me, office, residential, guest houses? Sir, when you can get the wear and tear is more if it is installed in production area. If in office, no wear and tear more. If it is residential accommodation, no wear and tear. If it is in guest houses, no wear and tear. Remember in which area if it is installed? Production premises. Now, road transportation vehicles, office appliances, office furniture, etc. Road transport vehicles. So you can't calculate the additional depreciation on that. Vehicles is plant and machinery only, but that vehicles used in production, that's okay. You can claim additional depreciation. Now the vehicles are using for transportation, road transportation purposes. Additional depreciation we can't give. Office appliances like air conditioners, yes, washing machines, etc. Whatever you are using in the offices, that is also not eligible. Sir, already any part of the asset cost we claim deduction in earlier years. Now can I get additional depreciation? No. If you got cost of asset, anytime if you got already deduction, now you can't get the additional depreciation. This is only important. If you remember these 4 exceptions, new plant and machinery excludes. First one, second hand. Next one, if plant and machinery installed in office premises, residential accommodation, guest houses, and road transport vehicles, office appliances, if any cost of the asset already claimed as an deduction. Now, what is that additional depreciation rate? Generally 20. This is a new rate. If put to use less than 180 days, here also what? 10%. That means nothing but exactly 50%. So 20 into 50, that is what? 10%. Very, very important point. Now I am going to start. If an SSE engaged in manufacturing or power sector, on this asset, all assets, these assets are used in business means he can get what? Normal depreciation. Directly he can get normal depreciation. But out of these assets, these are the new assets. Building is new asset. Plant and machinery is new asset. Can you tell me, if it is new plant and machinery, we can get additional depreciation. If it is new building, can I get additional depreciation? No. Eligible SSE you have to check. Eligible asset also you have to check. Next, very, very, very important point again, additional depreciation. Listen. Plant and machinery, new manufacturing business. First year, normal depreciation, we have to check, put to use, less than 180 days off, more than 180 days full. In second year, normal depreciation we can take full. Third year, normal depreciation we have to take what? Full. Why? For the second year, this asset is old asset. Additional depreciation, not a continuous benefit. In the year of acquisition, that is new asset, that's why you can claim additional depreciation, not for other years. In year 1, put to use less than 180 days off, more than 180 days full. Here we utilized how much amount of deduction? 50% only. We utilized how much amount of deduction? 50% only. Because it is one time benefit, we are unable to claim 100% days of that 20%. The reason we are using put to use lesson. Sir, remaining 50% can you carry forward to immediately succeeding year? Yes. This facility is available or not available in case of normal depreciation? Not available. Or if you are taken, you are in mad fellow only. Reason, anyhow you are claiming second year what? Full depreciation, normal depreciation. In case of additional depreciation, you can't get the further year's benefit. So whatever year you unclaimed 50%, it can be carried forward to the immediately succeeding year. The balance 50% of additional depreciation shall be allowed as deduction immediately succeeding year. It is not available. This facility is not available in case of what ma? Normal depreciation. Understood? Can you tell me what is that? Eligibility for claiming additional depreciation ma? Eligible SSC we have to check. What is the eligible SSC? Power generation as well as generation, distribution and transmission of power, manufacturing of any articles, things or any other thing. Now, which assets eligible ra? New plant and machinery. New plant and machinery excludes 4. What are the 4 ra? Yes, second hand plant and machinery. Second hand means if anything is used in India or outside India, if any plant and machinery installed in office premises, residential accommodation, guest houses. If anything is what ma? Road transport vehicles and office appliances we can't take. Earlier years, already any cost of the asset you claimed as a deduction, now you can't take the additional depreciation. What is the additional depreciation rate? 20%. In case put to use less than 180 days, 10%. Clear? Now, listen. Heart. That means, don't forget this point forever till the examination time. SSC can follow normal. Or SSC can follow 115 BSc, 115 BAA, 115 BAD, BI. Now tell me, for individual, which one is default? This one. If he didn't want to follow the 115 BSc, he can shift it to normal. For all other SSCs, it is default and these are all what ma? Optional. Can you tell me individual, domestic company, resident cooperative society? Depreciation, that means normal depreciation you can claim irrespective of the regimes. What is that? Normal depreciation you can claim irrespective of the regimes. But additional depreciation you can claim only in case of normal, not in case of 115 BSc, 115 BSc, 115 BAA, BAB, BAD, BAE. So if you want to get the notes, yes, you can visit our website www.shikharatutorials.in and you can download our materials under free resources. Thank you. Done. So additional depreciation we discussed. Now if you observe, first we started the depreciation concept by using one case law, that is Mahendra Mills Private Limited. Then after I given the instructions related to power sector undertaking company having 2 options. So anyone they can follow, but others can follow the WDV method block wise. So I given the instructions regarding how to calculate the block. Same rate of depreciation, same nature. Then after we discussed the conditions for claiming the depreciation. So then after we are traveling to nature of asset, rates. Based on nature and rates we classified block. So if you classified the block, then how to calculate depreciation ma? WDV method. That's why we discussed WDV format. In WDV format, yes ma, at least one asset and value is there, we can calculate depreciation. Otherwise we have to calculate capital gain. What is the section? 50. If depreciation is there, 50 will absent. If depreciation is not there, 50 will present. So how to calculate capital gain also we discussed. Then after we diverted towards the what is the cost of additions. General case, special case. Special cases few only we discussed. General case, that means what are all the things we have to add it to the cost of asset also we discussed. So if any interest on loan, the loan taken for purchase of asset, up to which date we have to capitalize that interest ma? First to put to use. After that revenue, that is section 36(1) allowed as an deduction. That interest amount after put to use allowed as a deduction under section 36(1). Next we discussed about the reduced depreciation also. If asset is new and put to use less than 180 days, we can take the reduced depreciation. Next one ma. So we discussed about the additional depreciation. Additional depreciation, after that we discussed normal depreciation is available in both the regimes, but additional depreciation is available only in normal. So next one. So I will take the unabsorbed depreciation before giving the break of 5 minutes to 10 minutes. Okay, unabsorbed depreciation. Sir, you know treatment of unabsorbed depreciation. You know treatment of unabsorbed depreciation very well. But what is the meaning of unabsorbed depreciation? You don't know. I will tell you. Absorbed means we taken. Unabsorbed means we are not taken as a deduction. I will tell you. In trading and P&L account, sales 20 lakh is there. All expenditure before depreciation 8 lakh. So 18 lakh. What is that balance amount available? So okay. First, what is that profit? Okay, you can take 2 lakh only available. Depreciation I computed by using section 32. I got 10 lakh. But how much depreciation I can absorb in the books? 2 lakh. 2 lakh is called as what ma? Absorb. Pending 8 lakh is called as unabsorbed. Why, sir? Because of depreciation, your profits cannot be converted into losses. You can't convert these profits into loss. So that's why we are going to take just how much ma? 2 lakh. Yes, remember, because of depreciation, our profits cannot be converted into losses. So that's why you can't take this deduction. More than 2 lakh, you can't take deduction. So that's why here unabsorbed is there. Can you tell me why unabsorbed is there here? Because of insufficient profits. This case I will take sales 20 lakh, expenditure 24 lakh before depreciation. Now it is what ma? No profits case. Can I claim 10 lakh depreciation ma? No. Any part of depreciation? No. This 10 lakh entirely what ma? Unabsorbed. So definitely if there is insufficient profit, if there is no profits, definitely we can't absorb the depreciation in books properly. That remaining amount is called as what ma? Unabsorbed depreciation. Yes, remember, again I am saying, because of insufficient profits, because of no profits, depreciation which we were calculated under 32, we can't take properly or we can't absorb properly. That's why the remaining amount is only called as unabsorbed. Can you tell me? Treatment set off against any head of income except salary. How many years we can do carry forward and set off ma? Unlimited years you can do carry forward against any head of income except what? Salary. Very important. Business or profession need not to be in a continuation. Sir, now I have an unabsorbed depreciation 10 lakh. Next year I closed my business. There is no PCBP, but you can set up this against any other head, right? Except salary. So that's why your business, if closed also, no problem. You can carry forward that unabsorbed depreciation to unlimited years and you can set off against the any income except salary. So order of priority, that means if you have an PCBP income, first you can give the preference to current year depreciation. So next, among these two, which one we have to give the preference? Tell me, among these two, for which one we have to give the preference? Business loss. Why? Business law having the limited validity of 8 years carry forward. That's why you have to give the priority. Unabsorbed depreciation, unlimited years. So that's why you have to give the priority to the last. So if any PCBP income is there, from that, if you want to set up, first you have to give the preference to current year depreciation, next business losses, then after unabsorbed depreciation. So and one more type of depreciation is there. What is that ma? Terminal depreciation. And we have one more concept, apportionment of depreciation. And after that we can discuss problems relating to depreciation also. Up to now, please take a break for 10 to 15 minutes. Please take. I will come, I think around 12:05 I will come and I will take class till 1:30. Yes. Yes, ma. Now we have to discuss last type of depreciation, that is what, ma? Terminal depreciation. So in order to understand the terminal depreciation, we have to remember power sector undertaking companies can follow what? SLM also. And if they are selling their old assets, power sector undertaking company, if they are selling old assets, and if they are following which method, ma? SLM, they have to calculate capital gain by using section 50A. Sir, if they are following WDV method, now if they are selling old assets, which section they are required to follow? 50 only. Already we know section 50. Remember, so this is an capital gain linking, right? Sir, power sector undertaking company, if they are following SLM method of depreciation, if they are selling old assets, they have to calculate capital gain by using section 50A. If the power sector undertaking company, if they are following WDV, we can follow section 50 only. Now, provision, I will explain you along with the example. So here, can you tell me what is that example, ma? ABC Limited, power sector undertaking company, actual cost 100, they are following SLM method and they are selling the assets in third year. First option 72, second option 89, third option 117. So now, in which year they are selling? Third year. So please calculate opening WDV for third year. So SLM means every year depreciation is constant, ma? First year 10, second year 10. If you remove the 10 from the cost, then you will get how much, ma? 80. 2 years depreciation we removed. Second year closing WDV. Third year opening WDV is how much? 80. Now in our books 80 rupees value is there. We are selling it for how much? 72. Loss or profit? Loss. Whatever the loss we got here, sale value is less than opening WDV. Please compare the sale value with the opening WDV. What you will get? Loss here. What you will get here, ma? Loss. Please tell me that loss is treated as terminal depreciation. Up to no depreciation, how much, ma? 20. At the end, terminal means at the end, what is the depreciation? 8. That means what is that effect we have to give, ma? P&L debit side, we have to give 8 rupees more. That is only terminal depreciation. Suppose we are selling it for the 89. Sale value is more than opening WDV. Now, earlier how much depreciation we claimed in this? 20. Now we are getting profit. Can you tell me? The value in our books 80. Now you are selling for 89. How much profit? 9. But on this asset, we claim 20 depreciation, right? So please reverse that, because earlier years you claimed depreciation. Now if you got profit, please balance that profit with the depreciation. That is only now balancing charge. Simply P&L credit side, how much you have to give, ma? 9. Simply PCBP balance every year 10 rupees. 2 years how much reduce? 20. So now because of selling of this asset, yes, please create the P&L credit side. How much profit you have, ma? 9. Now next best example, ra. At what value is sold, ra? 117. What is the value in the books? 80. Can you tell me what is the profit we got here? 37. So this 37, remember, depreciation, because of depreciation PCBP previously how much reduced? 20. Please create balancing charge to that extent of what, ma? Depreciation only. That means how much we have to credit to the P&L account? 20. To that extent of depreciation only we can credit. More than that, how much profit we got? depreciation more than that, how much ma? 17 rupees. It is short term capital gain. It is balancing charge PCBP ra. That means out of 37, 20 is taxable under PCBP and remaining 17 is taxable under the head what ma? Capital gain. Simply sale price minus cost of the asset. Sale price is nothing but what ra? 117. Cost is 100. That's 17 rupees only we have to charge under short term capital gain. So here the terminal depreciation means in first case only we can get ma? Which company? Please remember, power sector undertaking company, if they followed SLM method, if they are selling old asset less than what ma? Opening WDV, that loss is treated as an depreciation at the year of sale. That means at the end we can create the depreciation. If they are selling for profit, up to that extent of depreciation PCBP taxable, more than that capital gain. So this is only capital gain we computed under section 50 capital A. This capital gain only we computed section 50 capital A. Now again I will say one more point to all of you. Again I will say one more point to all of you. Now, if any power sector undertaking company, if they followed WDV and if they sold old asset, how we can compute capital gain ma? We can compute capital gain by using section 50 only. When 50A will come into the picture? If you follow the SLM method. Understood? Is use as usual only ma? If you follow WDV method, WDV format will be there. WDV format as per 43.6, if you are unable to claim depreciation, automatically we have to calculate capital gain. That is section 50. In this case, what pa? 50A. In the process only, you will get shortfall. That shortfall is treated as terminal depreciation. Surplus you got. So surplus to that extent of depreciation balancing charge, more than that you got, that is what ma? Short-term capital gain. So now please tell me, understood all of you? Last point in depreciation, which is very important. So many students are failed to understood this concept, even though this concept is in interlevel. Apportionment of depreciation. So before going to the apportionment, I want to tell you one basic example. I am selling one asset to B Limited. Who is selling the asset? A Limited is selling the assets to B Limited. Can you tell me on which date we sold? December. So in our WDV format, we have to remove it. Why? If you are selling during the first day, middle of the year, end of the year, then on that you can't calculate what ma? Depreciation, right? You have to reduce that asset from your WDV format as a money receivable on sale. So on balance only you can calculate depreciation. From B Limited point of view, they have to add this as an what ma? Cost of addition. But in cost of addition, here asset used for put to use less than 180 days. So then who is calculating depreciation ma? Seller or buyer? Buyer only calculating depreciation. So if you sold any of the asset during this year, yes, starting also, middle also, end also, you can't calculate depreciation because you are reducing from your WDV format. Who can calculate ma? Who purchased that asset? If they purchased and put to use more than 180 days, full depreciation, less than 180 days, half depreciation. Clear? Now, sir, students are doing the mistake. Here they are apportioning the depreciation between the predecessor and successor. That is not correct. Sir, when we have to apportion, that I will tell you. You have to apportion the depreciation in the amalgamation, demerger, conversion of sole proprietorship into partner company, conversion of partnership form into company, conversion of private company, unlisted public company into LLP. Here definitely predecessor is there, successor is there. Predecessor is there, successor is there. Predecessor, successor, predecessor, successor, predecessor, successor. In between the predecessor and successor, we have to apportion the depreciation. So these are already we done in which chapter? You on regular batch students, easily you can tell these concepts we discussed in business restructuring chapter and apportionment of depreciation concept also in our study material. In which chapter we have? Business restructuring and reconstruction only. So in this case, whatever the depreciation, remember how we can calculate depreciation. Please forget about the succession. As if there is no succession, please calculate depreciation. The depreciation between the predecessor and successor, we have to apportion in which ratio? Usage ratio. That means how many days they used that asset? Yes, we have to calculate, and by using that ratio only, we can apportion the depreciation. Am I understood all of you? Ma, please give me confirmation about understanding of this concept. So for doing the problems, definitely this example will helpful for you. Listen. Yes, I am highlighting with the different colors. Just listen carefully. Year starting day, year ending day. In this day, company formed by using converted by the sole proprietorship firm. On which date? 29/11. 29/11, which is started? Company. Company newly started by converting SOP. SOP, sole proprietorship firm, converted into company. Listen. In which year? 25-26. Ma, just please calculate the depreciation. While calculating depreciation, we have to take an assumption there is no succession. Just you can calculate depreciation. Yes, can you tell me how many days assets used by the predecessor? Ma, please calculate by using calculator. And next, how many days assets used by the successor? Remember, this date also we have to give it to the successor. Can you tell me? This date also we have to use it to whom? Successor. Then only your answer will be correct. Otherwise, you will get always the number of days less or more. All of you, please remember, while calculating the number of days, this day we have to give it to the successor. Next, ma, opening WDV, how many assets you have? Old assets 5 is there. Tell me, these 5 assets used by the sole proprietor 242 days. These assets used by the successor for how many days? Ma? 123 days. Yes, whatever that opening WDV old assets you have, you used 242 days, other fellow used 123. Okay, I calculated depreciation on that. So please apportioned by using that ratio. This depreciation 5 lakh, please apportion in that ratio only. In exam, they can give one more point. Assets purchased by the predecessor during the year. This is what ma cost of additions. During the year, we purchased assets. Who purchased asset? Predecessor. Now usage ratio is same or different? Different. Because this asset used by the predecessor for how many days? 45 days. But this asset used by the successor how many days? 123 days. That means on this new asset, please calculate depreciation. That depreciation, suppose 3 lakh is there. Yes, if I calculated depreciation on this asset, yes, you will get how much? 3 lakh. Just example. Please apportion in new ratio. What is the new ratio? 45 is 123. So 45 divided by 168, 123 divided by 168. Why? 168 days only totally used by the predecessor and successor. In exam, they will give you one more point. Some asset purchased by the whom? Successor directly. That means this used by the successor only completely. This entire depreciation we can allocate to whom? Successor. So that means one ratio is enough, or we have to calculate different ratios? Different. First, old assets related fixed ratio. We can calculate before conversion, after conversion. Old assets. New asset purchased by predecessor. New ratio. If asset purchased by the successor, directly we can allocate to successor. Understood all of you? So now we can discuss the questions from the workbook for depreciation. Okay, I will take standard question. Mhm. Ma, I will take question number 2. I will take question number 2. Then after, I will explain you question number 4. These two questions are enough for doing the depreciation concept. Okay, these two questions are enough for depreciation. We have 4, but these two, if you done remaining, you can do easily. Shall we start the question number 2? Listen carefully. Who is a company? Sole proprietorship concern is converted into company. Yes, with effect from what? November 29. So I will solve on paper. Okay. What is that previous year? 24, sorry, 25, 26. Yes. What is the starting day? 1/4/2025, 31st March 2026. Right? So can you tell me what is that conversion date? 29/11/2025. So before that is sole proprietorship form, then after that is what? Company. So listen, how many days? Already this is only our example, 242 days. It is what? 143 days. 123 days. 242, 123. Correct. Ma, opening day, these assets are there. 10% depreciation, 3,50,000, 10%, this one, this one, this one. But on this date, can you tell me before conversion or after conversion? Before conversion, predecessor purchased one asset. Next, after conversion, company purchased one more asset. Now they are asking depreciation, how we can apportion between the predecessor and successor. So now how we can calculate depreciation? Please calculate as if there is no succession. How many blocks are there? WDV block wise. Building, furniture, plant and machinery. Shall we calculate? Okay, first we can calculate building, furniture, plant and machinery, right? What is the WD? What is that values? 10%, 10%, 15%. 10%, 10%, 15%. Now tell me, what is that opening WDV? What is that opening WDV? So whatever the question saying, 3,50,000, 50,000, 2 lakh. 3,50,000, 50,000, 2 lakh. Plus cost of additions is there or not, we have to check. Yes, cost of addition is there. Plant we purchased. That means where we have an cost of addition. Cost of additions. Can you tell me whether it is less than 180 days or more than 180 days? Less than 180 days. Yes, 15th October means how many days? Less than 180 days. Can you tell me, yes, where we purchased this? For how much amount also? Please tell me. 1 lakh. Is there any sale? No. So that means as if there is no succession, means this is only assets we have, and on this we have to calculate the depreciation. This is a value called as what? Depreciable value. So 3,50,000. This is an how much? 50,000. And this is an what? 3 lakh. Listen carefully. Listen carefully. On this directly you can apply the 10% depreciation rate. On this you can apply directly 10%. But out of this 3 lakh, yes first you have to give the preference to this 1 lakh. On 1 lakh, what is the rate? 15% into 50. Why put to use is less than 180 days. Balance 2 lakh into what? 15%. Please tell me this depreciation, how much you will get? This one first 35,000. This one how much? 5,000. This one okay. Please calculate separately. So 1 lakh into 15% into 50%. 1 lakh into 15% into 50%. 7,500. Other one 30,000. This is what ma? 37,500. Now, opening WDV related depreciation, right? These assets opening WDV, this one. And opening WDV related how much ma? 30,000. We have to apportion this in which ratio ma? This ratio. So means opening WDV related depreciation, how much ma totally? 35,000. Please tell me 35,000. Next one ma? 5,000. Next opening WDV assets related depreciation, how much ma? 30,000. How much? 70,000. This 70,000 we have to apportioned in the which ratio? 242 divided by or 123 divided by 365. So tell me ma, 70,000 into 242 divided by 365. It is how much ma? 46,000. 4 11 or 10 ma, I taken approximately, I taken, okay, we can take 411 ra, no problem. But minus, if you are doing 70,000 minus, can you tell me how much ma? 46,411. How much ma? 23,589. Next one ma, closing WDV is there. Sorry, cost of additions is there. What is that ma? 7,500. Can you tell me that 7,500 that we have to calculate new ratio? Please tell me when we purchased that new asset ma? 15th 10. If you purchased on 15th 10, we used that asset how many days ra? 45 days, and they used that asset in 128 days, right? 45 days or 128 days ra? Sir, example same figures I taken. Now that is nothing but how many days ra? 45 divided by 160. 168. So 45 123 divided by 168. Please calculate ma. 7,500 into 45 divided by 168. How much ra? 19,866. If sorry, how 90,000 right? 7,500 into 45 divided by 168. So 2,000. 2008 2009 we can take ra, okay, minus 7,500 minus 2009, you will get what ra? 5491. But one more asset directly purchased by whom ma? Company. So can you tell me for this depreciation ma? 50,000 yes into 15%. After conversion purchased means less than 180 days. How much ra? 50,000 into 50% into 50%. How much ra? 12,500. Please tell me 50,000 into 15% into yes into yes 3,750. So 3,750 I can allocate directly to whom ma? Successor. So now depreciation we apportioned to the predecessor and successor 46,411 plus 2,009, that is 48,420. Next 23,589 plus 5491 plus 3750, 32,830. Now we can check the answer. Yes, 40, okay, 1 rupee ra, because of approximate differences, 32,831. Understood? So remember how we can apportion the depreciation and what are the ratios we can find out. Ma, first remember, if old assets are there, ratio is 1 ma. If assets are purchased by the predecessor 1. If assets are purchased by successor, that is completely we can allocate to the successor. Understood this one? Now we can go to that very important question. Yes, that is question number 3. It is very, very, very important question. Study material question in business restructuring chapter. Yes. study material question as well as it is an MQP question. It is an frequently asking in the model question paper also. Shall we start? Yes, ma. Smile Limited, wholly owned subsidiary company, and Happy Limited is Indian company. Yes, that means what is a subsidiary company? Smile. What is that, ma? Smile. What is that holding company? Happy. Next, Smile Limited having the how many plant and machineries, ma? Plant A, plant B. They have a depreciation rates 40%, depreciable value 3 lakh on the first day. Yes, that means they given the what, ma? Value. Plant A, plant B together, one block only. What is a block, ma? 40% block. What is that value of that block? Opening WDV, that one. Now they are selling the plant B to whom, ma? Their plant B purchased details they given. Plant B purchased on what date? Sir, how to find additional depreciation? Refer additional depreciation concept, Anna. If it is new plant and machinery, and if an SSC is engaged in the manufacturing as well as power sector, that is then only they can calculate additional depreciation, Anna. Okay. How to calculate additional depreciation? In comprehensive questions, I will tell you when we have to calculate additional depreciation. Just wait and listen, Anna. Yes. Plant B purchased details given, ma. When that is purchased and what is that cost also given. Now plant B is separated from that company, transferred to Happy Limited on this year. So same day, whoever purchased that is used by the successor. Now Happy Limited already having plant C. Now they purchased what, ma? Plant B. Now they are calculating depreciation between the Happy and Small. So now I will tell you this question in detailed way. Listen carefully. Okay. What is that company? First, Smile. Who are transferring, ma? Smile to Happy, right? Smile Limited. It is an wholly owned subsidiary. Happy Limited. It is what? Wholly owned holding company. So they have one plant and machinery block. What is that plant and machinery block, ma? Huh? Plant and machinery block. What is that block, ma? At the rate of 40%. Okay. In that, how many plants are there, ma? Plant A is there. Plant B also there. Right? Plant B purchased on when, ma? Clearly they given plant B purchased on this date. What is that? 10th November 2023 at the rate of how much, ma? 70,000. Right? Now, then after plant B given to them, yes, on 14th December 2025. Now what happened, ma? Plant B is we are given to them. Yes, on what date? 14th December 2025. In which year? Previous year, 25, 26. Super. Now, already they haven't what, ma? Plant C depreciation rate, that is value is what, ma? 60,000. They have an already plant and machinery at the rate of what, ma? 40% only. Which plant they have, ma? Plant C. Plant C. What is the depreciable value opening, ma? 60,000. Ma, 60,000. This plant, yes, ma, total opening WDV is how much, ma? clearly they given opening WDV of this block is how much? 3 lakh. Opening WDV is nothing but what, ma? This is also 3 lakh. This is only we discussed in special case. Wholly owned subsidiary company transferring the any assets to wholly owned holding company. If the recipient company is an Indian company, clearly in question given, it is an Indian company. Now, what is that value we have to take? In this, yes, they have to take the WDV to this smile. Now we have to calculate the WDV of this yes plant B. Opening WDV we have to calculate, that is on 1/4/2025. Opening WDV means that is only correct. Can you tell me, yes, what is that cost? First 70,000 minus, please calculate that asset related depreciation, which year we purchased on this date, means depreciation we have to calculate for 23-24. Can you tell me 23-24 means we purchased in this year less than 180 days, more than, less than, that means 70,000 into 40% into 50%. Tell me, 70,000 into 40% into, yes ma, into 50%. How much ma? 14,000. Ma, understood? Next, can you tell me, yes ma, 56,000 into how much ma? 40% directly. Why the old asset? We can take depreciation. 56,000 into 40%. How much? 22,000. Correct? 22,400. Now, what is that opening WDV on this date or closing WDV for that year? 56,000 minus 22,400, 33,000 what ma? 600. 33,000 what ma? 600. Now remember, this is an plant B WDV, right? Why they given ma? Cost from the depreciation you reduced, WDV of such asset you will get. Now, in this year, yes, already, what is that opening WDV? 60,000. What is that cost of additions? Yes, closing WDV only, cost of additions. Tell me how much? 33,600. But cost of additions related, we purchase less than 180 days or more than 180 days? Less than 180 days. Is there any asset we sold? No. What is that amount you will get? 60,000 plus 33,600. That is a 93,000 what ma? 600. What is that? 93,600. Please let me know. Yes, we can calculate first preference we can given to 33,600 into 40% into 50%. Why? It is put to use less than 180 days. Next we can calculate depreciation on fully. Yes, how much? 40%. Tell me, 33,600 into 40% into 50%. How much ma? 6720. Next 60,000 into 40%. How much ma? 24,000. So that means what is the depreciation ma? 24,000 plus 6720. How much ma? 30,720. That means happy limited depreciation if you absorb, how much ma? 30,720. Happy limited depreciation only we calculated up to now. Now they are asking happy as well as smile, right? Shall we calculate depreciation in the hands of smile? What is that opening WDV? 3 lakh. Is there any cost of addition? No. Money receivable on sale. Yes, what is that sale value? Yes, we sold that asset for how much amount? I think given clearly 20,000. They clearly given for how much amount we sold on this date, 20,000. Now tell me how much value we have to reduce, 20, because we charge it 20 only from them. How much we have to reduce, 20,000. So if you reduce it 20,000, what is that value? 2,80,000. Yes, depreciation is 2,80,000 into, yes, 40%. How much? 1,12,000. Sorry. 1,12,000, na? Yes. 1,12,000. Understood all of you? Sir, without this special case, I explained clearly cost of additions related special case. What is the special case number 4? Without this, you cannot do that sum. Done? All of you? So now you can ask any doubts from the depreciation concept. If you understood this, yes ma, here whatever the closing WDV of the plant is there, that is only cost of additions here. And next, depreciation while calculating the hands of the seller or transferor, simply for what cost we transferred to them, please reduce it as a money receivable answer. Understood all of you? So now we completed the very big discussion in this chapter. That is what? Seventh one, depreciation. Section 32 is nothing but what? Depreciation. So in depreciation, we covered the most of the things. We covered the most of the things. Every corner of the provision we covered in depreciation. Most important one, depreciation apportionment. Sir, if I am selling asset to other, you can't apportion depreciation, right? You sold. You can't calculate depreciation. Whoever purchased that asset, they only can calculate depreciation. That first point you should understood. Depreciation apportionment can be done in only 5 cases. That is in business reorganization cases, 5 cases only. Yes. If you have any doubt, yes ma, okay, maybe how to calculate additional depreciation you will get doubt, but in comprehensive questions I will tell you. In the question heading, if they are given the manufacturing company, power sector company, if they purchase a new plant and machinery, on that case we can calculate normal depreciation. In addition to the normal depreciation, we can calculate the additional depreciation also. Now, my next 2 sections are not much important, deductions only. Just I will tell you section numbers. Try to remember the section numbers. Anywhere, somewhere it will be useful. 32 is over. That is 33 AB, 33 ABA. If any SSC is engaged in the growing and manufacturing of tea, coffee, rubber, yes, in India, if he deposited some amount in NABARD, he will get some deduction under 33 ABRA. Can you tell me? If he deposited any amount in the tea, coffee, rubber development account, who can deposit that amount in that account? Who engaged in the growing and manufacturing of tea, coffee, rubber? In, sir, nothing but if any amount is there, it is taxable under Pgbp, but from this you can take 33 AB. So now 33 ABA is what, sir? If any SSC engaged in the prospecting, extraction and production of natural gas or petroleum in India, if they deposited some amount with the what SBI, they will get deduction. That fund is called as what site restoration fund. The deposit amount will be done in which fund site restoration fund. So these two, please remember, After this deduction, I didn't mention anything, ra. That means under which regime this is available or not available. I didn't mention anything. What is the meaning of this, ra? This deduction is available in both the regimes. If I am not mentioning anything after the provision, that deduction is available in how many regimes, ma? Both the regimes. Additional depreciation is available only in normal regime. Depreciation is available in both the regimes. Then one more deduction, 33AB, ABA. Sir, don't read entire content, just remember the headings. Okay, site restoration for nothing but who are engaged in the prospecting, exploration, extraction of the natural gas and petroleum. If they deposited that amount in the site restoration fund of SBI, they will get deduction. Next, same concept, tea, coffee, rubber. Yes, sir. Okay, as of now we discussed. But remember, what is the deposit time or due date? Return of income due date on or before you have to deposit. Here, before end of the year, you have to deposit. What is that amount of deduction, ma? Actual amount deposited, 40% of PGBP before this deduction. We don't know this deduction. That's why before this deduction, 40% of PGBP we calculate and actual amount of deposit. Here also, actual amount of deposit and 20% of PGBP. Sir, agriculturist mostly. So that's why they given more amount. Here, that is an business type. That's why they given 20%. Ma, understood? Yes, now I will write it on. What is that? 8th one, section 33 AB. So, section 9th one, 33 ABA. Are don't write it on whatever that alphabet you want. Please write it down what exactly act given. 33 AB. 33 ABA. Can you tell me when you will get deduction, ma? If any SSE engaged in tea, coffee, rubber, manufacturing as well as growing in India. So that is nothing but which account, ma? Tea, coffee, rubber, development account. Deduction with respect to tea, coffee, rubber, development account. Next, 33 ABA. What is a 33 ABA, ma? Deduction with respect to, this is nothing but what, ma? Deduction with respect to, if an SSE engaged in extraction, exploration as well as prospecting of natural gas or petroleum in India with respect to, if he deposited in SBI site restoration fund. Deposit amount entirely given or restricted with the PCBP? Restricted with the PCBP. How much, ma? 40% of PCBP. 40% of PCBP. Here deduction is restricted with the how much amount of PCBP, ra? Yes, ma, restricted with 20% of PCBP. Whatever you deposited, they will not give that amount of deduction, but they are given the what, ma? Restriction 40% as well as 20%. So these deductions are available in which regimes, ma? Both the regimes. Now next, 35. After this section, I will give a break, lunch break. Okay. What is the 35? Expenditure incurred on what, ma? Scientific research. Very, very important. You can get questions also from scientific research reason. Scientific research we can done in-house. Example, if I am doing manufacturing business, I can do the research in my business or profession itself. That means if you are doing any research related to business or profession, that is called as what, ma? In-house. I am running educational business, I don't have any scope of doing research. So that's why I can do what, ma? Contribution to others. Contribution to others. Now important analysis. I have a business, that is institute. Now I am given this some amount of contribution to Tata Limited. So for the research purposes, they can do scientific research. That's why I am giving contribution. Now I can calculate which head of income, ma? PCBP. Because I have a business, right? In the calculation of PCBP, please take 35 deduction. Because you are contributing to others. Sir, Mr. A is a salaried employee, sir. Now he contributed to Tata. Yes, he can also contribute, nothing wrong. He can also contribute, nothing wrong. But can he calculate PCBP? He is salaried employee. How he can calculate PCBP? There is no PCBP. That's why you can't take what ma 35. No problem. For you, chapter 6A deduction is there. What is that ma? 80 GGA. 80 GGA. Understood? Ma, if any person who is doing the business, if he contributed to others for scientific research, he can take section 35. Salaried employee doesn't have any PCBP income. How he can take section 35 deduction? For him, they are given the chapter 6A deduction under 80 JJAA. So research is already classified into two types, right? In-house research. So just I will provide you summary point. Listen carefully. So now my business commences in this year. Before commencement of business, I incur the scientific research expenditure for how many years ma? 5 years I incur. But 5 years related I will not give deduction. Prior to the commencement, how many years I will take? 3 years. What is that ma? 1, no, 2, 3. In these 3 years, before commencement 3 years, whatever expenditure you incurred, revenue also, capital also. With regarding what ma? Research. With regarding research, if you incurred any revenue expenditure, capital expenditure, you can take deduction. Sir, in this year, can you take deduction? Why? You can't take. Why? There is no books of accounts for you. If you calculated PCBP, then you can take deduction under 35. Here, there is no scope of computing PCBP because you are not started the business. Business is started in this year. Now you can calculate PCBP. Now you can take deduction, right? So that's why, please calculate the deduction in the year of what ma? Commencement. On or after, if any expenditure if you incurred. In this year, next year if you incurred, now every year you can calculate PCBP, right? Because you started business. In that business, every year you can take deduction. That is nothing but revenue also, capital also. That means scientific research prior to business commencement, how many years we can allow the deduction ma? 3 years. That you should remember. That is only now I am discussing 3 years prior to that commencement. If any expenditure is there, allowed as a deduction in the year of what ma? Commencement, how much? 100%. After commencement or on or after, both the capital and revenue, in the year of incurrence, you can take deduction. Deduction at the rate of what ma? 100%. Deduction at the rate of 100%. Remember, ma, after commencement, revenue expenditure means any expenditure. Capital expenditure, please exclude land. Why? So that is a market value of the lands is very high in some localities. That's why they don't want to provide the deduction with respect to lands. Before commencement, capital expenditure, same definition ma, land excludes. Revenue expenditure, only salaries, materials, but excluding what ma? Perquisites. Are you can give the salary to your staff. You can purchase materials also, revenue expenditure. But before commencement, how you can give the additional benefits to the employees? That's why they are not giving the deduction with respect to the perquisite. Ma, understood? Capital expenditure includes, capital expenditure excludes, revenue expenditure includes, revenue expenditure excludes. Next, if an SSE following the normal regime, deduction available. In-house research. If an SSE following these regimes also, deduction is available. Remember, very important, section 35, in-house research related deductions, 100% of the capital expenditure, revenue expenditure. Capital expenditure excludes land, revenue expenditure before commencement excludes perquisite, salaries and raw material included. So after that, everything included in revenue expenditure, but capital expenditure excludes the land. Sir, that amount of deduction is available in how many regimes? Both the regimes. Now, we have to discuss the contribution to others. Before going to contribution to others, I have to tell you one important point. If company, company engaged in the business of biotechnology or business of manufacturing of production of articles or things. If any company engaged in the biotechnology, if engaged in the manufacturing, but manufacturing of things not covered in what ma 11th schedule. That means in 11th schedule they given this specific list ma. Other than that, if you manufactured anything like washroom related sinks and alcohol, so some items they identified. So that not being that articles, if you manufactured anything, if you incurred any expenditure in-house, I'm talking here also in-house only, but specifically now I'm talking about the company engaged in these two businesses. Deduction under section 35 available, how much ma? 100% of expenditure includes, 100% of what ma? Expenditure. Capital expenditure excludes what ma? Land and building. Ma remember, capital expenditure excludes what ma? Land and building. Remember, this deduction is available if company is paying what ma? Normal tax rate. If company following 115 BA, BAA, BAB, this deduction is available or not available? Not available. My in-house research generally we discuss, specifically in the hands of company, how also we discuss. And one more thing, there is a differential views also. Capital expenditure only what ma? Excluding land. Capital expenditure only excluding land. But there is a differential views with respect to ICai or ICMI. Capital expenditure excludes what ma? Land and building. In MCQ sessions also I will cover one MCQ exclusively related to this. In-house research we discussed. Generally, in-house research specifically company engaged in the biotechnology as well as what ma? Business of manufacturing the production, manufacturing the articles or things. So can you tell me 11th schedule they given the list ma? Other than that, if you manufacture, then only you can cover here. Deduction how much ma? 100%, but capital expenditure excludes land and building. Revenue expenditure, any expenditure. Sir, second type, contribution to others. Ma, if you contributed for scientific research, scientific social statistical scientific research, if you contributed some amount to whom, please read this and read same. If you given for scientific also, social statistical, research association, university, colleges, other institution you given, here also same list, but purpose scientific previously, here social statistical. Here Indian company if you given for any purpose, social statistical scientific. So here if you given for scientific, how much amount of deduction ma? Whatever amount you given as an contribution, 100% you will get what ma? Deduction. Remember, contribution to outsiders is available for the deduction only if an SSC following normal. If an SSC following, remember 115 BAC, BAA, BAB, BAD. Sir, why I didn't written BA? BA is not applicable practically. Domestic company having three rates, BA, BAA, BAB. But always I will write these two ma, because it is not applicable practically. So because it is an old one, not applicable. That's why always I will write these two. These two rates for whom? Cooperative society. Available or not available? Not available. Once on any asset, you claimed section 35 deduction, means how much amount of deduction we claimed ma? 100%. Example, capital expenditure also you can take deduction, right? Capital expenditure also you can take what ma? Deduction. That means how much amount of deduction? 100%. If you claimed 100% deduction, further can I give depreciation ma? No. If I am giving depreciation again, that is called as what ma? Double deductions. Double deduction concepts are not available. Already I purchased building. Building related already we taken what ma? Deduction under section 35. 1 crore building, 1 crore I taken. In our books of accounts, we have to record it as a 0. So then after we don't want to provide the depreciation because 100% of that cost already allowed as a deduction. Ma, understood all of you? So that's enough for the section 35. Yes, but one more point I will tell you. Ma, we have an unabsorbed scientific research what ma? Revenue expenditure as well as what ma? Capital expenditure. revenue expenditure fully you can absorb. That means what ma? Fully you can absorb. Absorb means what? Profits available or not available also, you can take this full amount as an what ma? Deduction. Remember, if revenue expenditure is there, if that is eligible for deduction, irrespective of the profits, please remember, here how much revenue expenditure eligible for deduction? 6 lakh. We taken 6 lakh. Here also 6 lakh available. We taken deduction how much ma? 6 lakh. That means revenue expenditure fully you can absorb. Capital expenditure only we can absorb to the extent of profits. Because of scientific research capital expenditure, our profits should not be converted into losses. Same concept we discussed in what ma? Depreciation. Because of depreciation, your profits can be converted into losses? No. Like that, capital expenditure deduction also restricted with the profits. Suppose if there is a profit sufficiently, we can claim both. If profits are insufficient, you can claim this irrespective of profits. But capital expenditure you can claim if profits are available only. So that's why it is an unabsorbed category. So if profits are not available, we can absorb somewhat, remaining is unabsorbed. There is no concept of unabsorbed scientific research revenue expenditure. Why? It is always fully absorbed. What is that unabsorbed category we have ma? In this chapter again? Unabsorbed scientific research revenue expenditure or capital? Capital. So what is the treatment? Same as it is like a depreciation. So whatever the depreciation, unabsorbed depreciation can be carried forward to the number of years unlimited. It can be useful for set off against any head of income except salary. Okay, order of priority and all the things also you know. Remember, unabsorbed revenue or capital? Capital. Scientific research expenditure you can take deduction, revenue capital, revenue totally you can take deduction irrespective of the profits, but capital you can claim only to the extent of what? Profits. If profits available, you can absorb something, remaining is called as what ma? Unabsorbed. So now we discussed the section 35. 10th one, section 35. What is that ma? Expenditure on scientific research. Can you tell me expenditure on scientific research means? Expenditure on scientific research means, tell me ra. In-house, contribution to others, both are there. In-house available in both the regimes. But in-house specifically for company engaged in biotechnology as well as manufacturing, in that case the deduction is available if the company following normal rates only. So outsourcing, that means contribution to others. Can you tell me deduction is available only which regime? Normal, not available in 115 BAC, BAA, BAB, BAD, BAE. Understood? So next we can continue after the break. Okay. I need more time break. I will try to continue till 7 also today, 6 to 7. So that's why you can take break. How many hours break is required? First tell me that. How many hours break is required? First tell me that. Based on that we can decide. All of you, please tell me how many hours break is required. 1 hour is enough or 1.5 hour or 5 hours, 6 hours? Please tell me, based on that we can take a break. So if you are not saying anything, based on my convenient, I can take break. Okay, 1 hour. So break up to, okay, 2:30 we can take. Thank you. Sir, we are going to complete the deductions. Which deductions are very important? Section 36 deductions are very important for doing comprehensive problems. 32 also important. So this is unimportant. That's why we are going in where ma? Speedway. That means just we discussed what is that section. But 35 important. That's why we discussed everything. So now next sections, if you observe 36 is there, other deductions, which is very, very, very important. 37 general deduction, that is also very, very important, that we can discuss in the afternoon session. Thank you. I don't want to go in a speed way. Okay, I will go in a normal way like Evo batch only. And remember, if it is done tomorrow, today we can close till 6 or 6:37. If it is not done, part 2 we can discuss tomorrow questions. Okay. Yes, ma'am. Very good afternoon. Yes, all of you, very good afternoon. Yes. Now we can start the next one. Section number 35. Section number 35. ABA, ABB. Yes. Remember only section number and name. That's enough. Don't read these things. Not required for exam purposes. Just what is it? 35 ABA, ABB. Expenses if you incurred for getting right to use spectrum or telecommunication services. Example, if I am taking the telecommunications related license from TRAI, so telecom regulatory authorities from that, if I am taking the license, definitely I have to incur some expenses. That expenses you can take it as deduction in your business or profession under section 35 ABA for spectrum, 35 ABB for telecommunication services. So just write it on the section number. Yes, if you observe, what is that 35 ABA and 35 ABB? Yes. 11th one, section 35. What is the 35? ABA, ABB. ABB. Deduction with respect to the what ma? Expenses for obtaining the spectrum or telecommunication services. Deduction with respect to expenditure. So which expenditure ma? So spectrum as well as or telecommunications license. Remember that not required, but if you have an energy and time, yes, you can read these also. But this section, after this section, I didn't mention anything. Okay, you can observe. After completion of this section, I didn't mention anything. Means what? This deduction is available in the both the regimes. This deduction is available in both the regimes. Remember, scientific research already we discussed. What is that? Scientific research already we discussed. Scientific research related expenditure, yes, in-house is available in both the regimes. Outsource, it is available in only normal regime. So next we started 35 ABA. Just we remember the section number only now. Very important. Next section 35 done. Yes, 35 ABA, ABB done. Now we have to start the 35 AD. Important, listen carefully. Investment linked tax incentive for specified business. What is that? Investment linked. That means if you invested some amount, by using that, you will get the what ma tax incentive. What is the tax incentive? Simply deduction. For which business? Specified business. For which business? Specified business. Remember, capital expenditure incurred for specified business, that is allowed as what? Deduction. Again, I am repeating this. Please listen carefully. If you invested certain amount for specified business, you will get tax incentive. What is the tax incentive? Deduction. Or That is only another name. Capital expenditure allowed as deduction for specified business. Understood all of you? Yes. So this deduction will discuss in the first part. What is a specified business? I will tell you. Clearly in Act, they are classifying the how many businesses ma? Please thoroughly you can check. 14 businesses are called as a specified businesses. How many businesses? 14. First one, cold chain facilities. Cold chain facilities. Second one, warehousing facilities for storage of agriculture produce. Next one, warehousing facilities for agriculture produce. Cross country natural gas, petroleum, crude oil. 2-star or above category hotel. Hospital in India with 100 beds. Notified scheme for slum redevelopment. Any other housing project approved by central government. Production of fertilizers. Inland container depot or container freight station. Production of honey beekeeping. Warehousing facility for storage of sugar. Remember, warehousing facility for agriculture produce here. Here warehousing facility for storage of sugar. Transportation of iron ore through slurry pipeline. Semiconductor manufacturing or vapor fabrication. Infrastructural facility. Remember, these 14 businesses you have to remember, not in order. Okay, in any question if they are given that business, you have to identify that is nothing but which business? Specified business. You have to identify that business is what? Specified business. Remember, if these specified businesses related, if you done any investment related deduction, but here investment must be which expenditure? Capital expenditure. In section 35, either capital or revenue. Scientific research, either capital, revenue. But here only which expenditure? Capital expenditure covered. Okay, sir, what is that amount of deduction we can get, sir? If you incur capital expenditure, 100% of that capital expenditure you will get it as deduction. But clearly in this section, capital expenditure excludes 3 things. One is land, second one goodwill, third one financial asset. That means any investment in the form of liquid, listed equity shares, etc. So financial assets means what? Shares and securities related. So these are all the things allowed or not? Not. Emandi? Okay. 100% of capital expenditure will be allowed as deduction. But capital expenditure excludes what? Land, goodwill, financial assets. Remember. Next. Sir, second point also we understood. Sir, in which year we can get deduction? Okay. Specified businesses related capital expenditure we can get it as deduction, that to 100%. But now my question, in which year we can get deduction? Remember, business commencement year, before any expenditure incurred, yes, there is no limit. But scientific research related, how many years? 3 years only, maximum 3 prior years. But here there is no time limit. If any capital expenditure incurred on this time before commencement, if any capital expenditure incurred, then what we have to do? That will be allowed as deduction. Can you tell me, can I compute Pgbp income before commencement of business? No. Then how can I take this deduction? You can't take this deduction. Please wait till the business commencement. In this year we can calculate what? Pgbp income. From that Pgbp income you can take section 35AD deduction. That means deduction will be allowed in the year of what? Commencement. But here only you will maintain the books, right? So that's why you can take the deduction in this year. Now, while writing the amount in this year books of account, that expenditure must be what? Capitalized, because the capital expenditure only you will get deduction, right? This expenditure in this year books you must be treated as on what? Capital expenditure. Next, on or after commencement, if any amount incurred capital expenditure, then what is the treatment? In the year in which you incurred, you can take it as what? Deduction. Why? On or after means from this year onwards, every year we can calculate the Pgbp income. From that PCBP income, you can claim section 35AD deduction. Remember, 35AD deduction is available in which regime? Only normal in 115 BSc, BAA, BAB, BAD, BAE, not allowed. Understood all of you? Yes, sir. Now I will tell you this one more point. Whatever asset you acquired in the specified business, that asset you have to held for the, yes, how many years, ma? 8 years. Because I given 100% of the capital expenditure as a deduction, right? So that's why whatever you acquired for the specified business, minimum how many years you have to use, ma? 8 years. Suppose you purchased it for specified business, I given 100% of that amount as a deduction. But now you shifted from the business to, yes, one business to another business. That is what, ma? Non-specified business. Can you tell me? After 8 years, you can transfer, no problem. But within 8 years, if you transfer, then what is the consequence, ma? Simply, yes, earlier deduction, now we have to reverse. Earlier, how much deduction, ma? 10 lakh. Now that at 10 lakh, we have to reverse. Simply, in this year, we have to create the what, ma? Deemed income or deemed profit under section 41. Already I told another charging section is there. Simply earlier year deductions or earlier expenditures, if you want to reverse, you have to follow which section, ma? 41. So now simply this deduction I want to reverse because you are not satisfied the condition of holding period of how many years in the same business? 8 years. So that's why you can. But some relaxation. Right? If this fellow purchased the same asset, how much depreciation he can claim, bro? If he purchased 10 lakh worth of machinery, he can claim 10 lakh into 15% depreciation in year 1, right? So that's why that amount you can reduce. Finally, what is the deemed income? 8.5 lakh. However, SSE shall reduce the amount of depreciation under section 32. This is an notional depreciation only. Suppose if you purchased asset on your own without this transfer, here you can claim what, ma? Depreciation. Yes, that's why clearly act saying that, yes, that is a notional depreciation you can reduce while calculating the what, ma? Deemed income. Ma? In section 35 AD only, they given the holding period point. In 35, there is no holding period point. Next. Ma'am, one more condition, listen carefully. Once SSC claim the benefit of 35 AD for particular year, for the specified business, what is the benefit? 100% of capital expenditure as a deduction. He cannot claim chapter 6A deductions under heading C. What is the chapter 6A deduction under heading C, ma? Simply deductions under the heading C, income based chapter 6 deduction 10AA for the same year or any other year. So if you claimed a specified business related deduction for you, chapter 6A deduction under heading C, chapter 6A deduction under heading C 10AA is not available. Is what, ma? Not available. So already you know, okay. Here capital expenditure, right? Okay, I am acquiring asset with a 40,000. That is capital expenditure only. How much? 40,000. Now I am making a payment to a person in a day. Multiple means aggregate. Single payment means single. If that payment is more than how much, ma? 10,000 only, because I am incurring how much? 40,000 now. Now in this case, that amount should be incurred in electronic modes. If you are incurring other than electronic mode, that is not eligible for deduction under section 35 AD. Simply capital expenditure means, yes, you can incur, but more than 10,000 per day to a person, if you want to pay, please pay in electronic modes. Otherwise, that is not considered for deduction. You know already this basic point. Loss from specified business can be set off against what, ma? Income from specified business. If you have a loss from specified business, yes, you can set off in against the income from specified business only. These points are enough in the yes section 35 AD. So what is the 35 AD, ma? All of you please let me know. All of you please let me know what is the 35 AD. Investment linked. What is that? Investment linked Wait. Investment linked tax incentive. How much tax incentive ma? 100% of capital expenditure, or we can call it as capital expenditure allowed as deduction. So simply here I can say, what is that? 12th one ma? Section 35 AD specified business. What is that ma? Specified business. Understood? Now next one ra. Remember, next sections are, in some examinations they ask this 35 over, yes, if you observe 35 over ABA, AD, then after CCA. Next section is what ma? CCA. Next one ma? Triple C. CCA, Triple C, CCD. These three sections, as I said, please remember. I will explain you first these three, then after we can write it down. Listen carefully. 35 CCA, 35 Triple C, 35 CCD. Listen. Contribution for rural development. Ma, if you contributing any amount for rural development, listen, that's enough. Okay, so rural development means how, sir? Notified rural development fund. If you contributed to the notified rural development or notified national urban poverty education fund, for these two funds, if you contributed, how much amount deduction you will get? 100%. Suppose if you given 1 lakh, 1 lakh amount you can take it as deduction in your PGBP under section 35 CCA. This deduction is available irrespective of the what ma? Regimes. That means if you followed normal also available. If you followed 115 BAC, BAA, BAB, BAD, BAE also this is available. Can you tell me, if I am asking 35 CCA, you have to tell me contribution for rural development. Next, if you are incurring any expenditure for agricultural extension project, sir, nothing but here also simple ma, 100% of capital expenditure will be allowed as deduction if you incurred any amount for that agricultural extension project. Sir, what is that agricultural extension project? All the things will be, yes, notified by the CBDT, not required to learn also. Just remember, agricultural extension project related contributions is allowed as deduction under 35 CCC. How much ma? 100%. But this deduction available only in which regime ma? Normal regime. It is not available in 115 BAC, BAA, BAB, BAD, BAE. Next 35 CCD, same. My contribution simply rural development fund, rural development related. Second one, agricultural extension project. It is nothing but what ma? Previously two sections, any SSC can make the donation or any SSC can make the contribution. But in 35 CCD, contribution should be done by company on notified skill development project. Here SSC is nothing but whom? Company. How much expenditure is allowed as deduction? 100%, but excluding what ma? Land and building. Excluding land and building. If any company incurred expenditure on the notified skill development project, yes, what is that expenditure ma? Other than building on land. So how much you will get ma? 100%. Available in which regime ma? Old regime, that is normal tax rate, not available in company. Sir, here why I didn't return the 115 BAC, I didn't return 115 BAD also I didn't return, 115 BAE also I didn't return. What is the reason ma? Here SSC is company means domestic company can follow these two optional tax rates only, right? That's why I written these two. This can be ignored in this section directly. So now 35 CCA, 35 CCC, 35 CCD, these three sections are important. Listen carefully. Tell me ma, 13th one. Section 35 CCA. 14th one, section 35 CCC. Section 15, section 35 CCD. Tell me ra. Here contribution to, tell me, contribution to rural development. Contribution to rural development. Second one, 35CCC, contribution to agricultural extension project. Contribution to agricultural extension project. Yes, ma. Next one, ma, contribution by company to the notified skill development project. Contribution by company to notified skill development project. Understood? So these three sections as etc. Any regime, it is available in any regime. It is available only normal. It is also available in what, ma? Normal. Ma, understood? Here also, it is also available in where, ma? Normal. It is available in any. Scientific research, in-house, can you tell me what do you mean by in-house? Any. Outsiders, contribution. Normal only, right? Contribution done to outsiders, that is normal. Only in normal rates you can take what, ma? Deduction. So now I will highlight this. Normal, any regime, normal, any regime, any or normal. Yes, ma. This one, ma, any. These two sections, nothing but what, ma? Any. Okay, if you observe depreciation, normal depreciation, any. Additional depreciation, only what, ma? Normal. Okay, it is what, any. If I am not mentioned specifically, that is available under any regime. Are you understood? Online. Clear? Sir, these three as an set very important, don't ignore. Now we can discuss one question from the workbook. That is question number 5. Study material question. This question you will get it out in the, I think, tax planning chapter. But now I will discuss in the PCBP because section 35. Sir, how you identified section 35, sir? Because they given the cross-country natural gas pipeline. SSC engaged in the cross-country natural gas pipeline. Yes, they commenced its operations on this date. Now, company incurred the capital expenditure. Remember, they commenced their operations means they started business on this date. Capital expenditure before commencement incurred. Can you tell me, capital expenditure 100% allowed as deduction, but capital expenditure excludes land, goodwill, financial instrument. That means here we can take 1488 only as a deduction. So before commencement this expenditure incurred, how I know? 1st April 2025 is an commencement. That means January to March incurred amount they given. It is, if it is capitalized in the books of account, then you will take that amount as an what, ma? Deduction. In which year, ma? In the year of incurrence, that is previous year 25, 26. Assessment year 26, 27. Next, ma, during the financial year 25, 26, that means what, ma? After commencement, how much capital expenditure incurred, ma? So before commencement 1488. So after commencement during that year, yes, we incurred 6,600 capital expenditure, but cost of land includes. Please remove the cost of land. How much it will be? 5,000. 500. So total amount of deduction is how much, ma? Because we have to exclude financial instrument, we have to exclude cost of land. Finally, how much, ma? 5,500, 1488. Totally you will get deduction how much, ma? 6,988. 6,988. Understood? This is a specified business related. Yes, a normal problem, not much difficult. So now one more section we can start. Up to now we discussed 35, 35A, B, A, B, B, 35, A, B, A, B, B also we discussed. Yes, next one 35 AD, 35 triple C, sorry, CCA, triple C, CCD. Now we'll discuss 35D. What is the 35D? Please read. Amortization of preliminary expenditure. If before commencement of business, if any expenditure is there, how we can take that expenditure as a deduction without having the books of account, without having the computation of PGBP income, when you can start the computation of PGBP on or after commencement. So that's why whatever that expenditure you incurred before commencement of business, that is allowed as deduction in how many installments, ma? 5 installments. That means from that commencement year, next 4 years, you will get it as an what, ma? Deduction. You will get it as an what, ma? Deduction. Understood? All of you? Sir, this is only the provision, before commencement, if any expenditure incurred, how we can take deduction? Because we don't have any books of accounts, we don't have any income from PGBP computation. When we can start these things after commencement? After commencement, can I take the entire amount as a deduction in the year 1? Impossible. If you take an entire amount of a deduction in that first year, you may get the losses. That is not correct. So that's why clearly they are saying whatever the preliminary expenditure is there, that should be amortized over the how many years period? 5 years. Understood? Now eligible SSE is whom? Remember, for this section 35D, Indian companies is only eligible. Other than company, resident SSE is only eligible. Non-resident entity cannot take the 35D. Yes. Eligible expenditure is what? Remember, now I want to start this institute in Hyderabad first. Yes. Before commencement, only new undertaking, if you are started new business, that means nothing but what, we are not at all started our institute. 2 months I incurred some amount before commencement. That is what, before commencement, if any expenditure incurred for new undertaking. After commencement, okay, we started Hyderabad head office. Then I want to expand it to, yes, any other cities. That is only extension of any undertaking or setup of new unit. This is also preliminary expenditure. This is also preliminary expenditure. Many are thinking before incorporation or before commencement. After commencement also, for expansion or extension purpose. What is that, ma? Extension purpose. If any amount incur, that is also we can call it as what, ma? Preliminary expenditure. Before commencement anyhow okay. After commencement for expansion purpose, if you started any new unit or if you started any new branch, that expenditure also preliminary expenditure. How much amount you can take it as deduction, ma? Entire preliminary expenditure will be allowed as how many installment, ma? 5. But remember, in first year you should submit the CA certificate regarding in first year if you submitted, that's okay. Remaining years also we can take constant deduction, right? So that's why they are asking yes, preliminary expenditure computation related, please take one CA report along with the return of income also you have to submit. In which year we have to submit? First year. No need to submit for all the years. But MCQ related, it is very important. Listen carefully. MCQ related, it is what? Very important. Please check it out clearly. Eligible SSE is whom? Indian company, right? Indian company cannot take the preliminary expenditure unlimited. Just preliminary expenditure, suppose 50 lakh he incurred. This cannot exceed higher of the following. 5% of cost of project, 25 lakh. Cost of project into 5%. Capital employed, what is that? Capital employed into 5%, it is 30 lakh. Capital employed into 5%. In exam they will give you cost of project. In exam they will give you capital employed. Now tell me whichever is higher. 30 lakh. Even though you incurred preliminary expenditure 50 lakh, now deduction cannot exceed how much ma? 30 lakh only. This 30 lakh we have to give in 5 installments. If that is other than Indian company, resident SC, so now capital employed will absent. So now we have to compare only with the what ma? Cost of project. Now suppose 50 lakh, 5% of cost of project is 35 lakh. Now what is that amount of deduction we can take? 35 lakh divided by 5. Sir, very, very important for MCQ. If it is Indian company, preliminary expenditure cannot exceed higher of the two things. 5% of cost of project, 5% of capital employed. If any other SSC other than Indian company, if any SSC other than what ma? Indian company, resident SC, it cannot exceed 5% of what ma? Cost of project. It cannot exceed 5% of cost of project. Now, this 35 DD, you know already, amortization of expenses incurred for the amalgamation or demerger. In the process of amalgamation or in the process of demerger, in the process of amalgamation, in the process of demerger, if you incurred any expenditure, that expenditure you can take it as an deduction in how many installments ma? 5 years. Equally you have to amortize. 35D series is totally amortization. 35D, amortization of preliminary expenditure. 35DD, amortization of what ma? Expenses for amalgamation or demerger. Demerger take place or amalgamation take place next 4 years. Totally how many years ma? 5 years. This deduction also only for whom ma? Residents. That means Indian company is always resident. So no amalgamation demergers for the company only. That's why deduction also given to company. Previously preliminary expenditure can be incurred for the company other than company. That's why covered both. Understood? So now if you observe, I will try to write it down. What is the 35 CCD after that? 16th one, section 35D. What is the 35D? Amortization of preliminary expenditure. Next one ma, 17th one, section 35 DD. What is that ma? Amortization of what? Expenses incurred under amalgamation or demerger. Tell me, this deduction, if I am not saying anything, means it is available under both the regimes. Amortization means you have to remember how many installment? 1/5. Here is there any limit? Total preliminary limit is there. Here there is no limit. Directly you can allocate 5 equal annual installments, right? Now next one ma, same section 35 DDA, amortization of VRS expenditure. Sorry, amortization of VRS compensation. Listen. Amortization of expenses incurred under VRS scheme 35 DDA. If any VRS amount given by the employer to employee for whom it is an expenses employer. So that's why in their business they can take deduction under Pgbp under section 35 DDA. Because in my business, I'm given one payment to my employee. That payment is VRS compensation. In terms of employee point of view, it is taxable under the head what ma salary, because that is an income to the employee from employer. Eligible SSC, you know, any SSC ma, but previous two sections SSC means resident. Here any SSC. Period of deduction ma, 5 equal annual installment from the year of payment. This deduction is allowed on which basis ma? Cash. If you actually paid from that payment year next 5 years, that means this year and next 4 years. Double deduction is what ma? Not available. Remember this point. Suppose sometimes VRS compensation in paid in what ma? Installment basis. Now each installment is available as a deduction for 5. Suppose 5 lakh VRS amount. Every year 1 lakh, 1 lakh, 1 lakh they are given. Okay, one example I will tell you. Total VRS amount is how much ma? 10 lakh. But there, if they given 10 lakh at a time, now 10 lakh divided by 5, every year how much ma? 2 lakh. But 1 year they given what ma? 4 lakh. Second year they given 4 lakh. Third year they given 2 lakh. Now let me know. Year 1 we got how much ma? 4 lakh. Please allow in 5 installments. Year 2 I got how much ma? 4 lakh, 5 installment. Year 3 I got how much ma? 2 lakh in 5 installment. Remember, whenever you are paying in installment also, lump sum also, from that next 5 years. From that what ma? Next 5 years. So this deduction is allowed on which basis? Cash basis. Sir, if I am not mentioned anything, this deduction is available in both the regimes. This deduction is available in both the regimes. Clear up to now? Yes. Next. Ma 35E, not that much important, just refer. Amortization of expenses incurred under prospecting, developing of what ma? Sudden minerals. Sir, for prospecting and extraction and development of minerals, minerals means nothing but what ma? Here you can observe. So petroleum, natural gas, etc. Yes, if you incurred any expenditure for prospecting and development of the what minerals, that expenditure you can take it as an deduction. Yes, but the deduction terms and all the things also not required. So just I will write it down. That section number is there, amortization related what 35D. After that we have what section 35E. Tell me amortization of expenses incurred for prospecting and developing what minerals. Understood? If I am not mentioning anything, okay, here I don't want to mention. If I am not mentioning anything means the deduction is available in both the regimes, right? Okay. If I am not mentioned anything, yes, what is that? The deduction is available in both the regimes. Amortization things available in both the regimes. Understood all of you? Yes, online. Now we are going to start the heart of the PCBP. It is very important. Don't ignore this discussion. Now I am starting the 20th, section 36, subsection 1. What is that, ma? Other deductions. Sir, what is that other deductions, sir? Simple, ma. In 30, expenditure related to buildings covered. In 31, expenditure related to plant and machinery which is used in the business or profession covered. Proportionate deduction, okay. Depreciation here covered. Tea, coffee, rubber development account, site restoration fund, scientific research, expenditure related to spectrum, telecommunications, specified business, rural development contribution, agricultural extension project, notified skill development project, preliminary expenditure, VRS, and amalgamation demerger related. Next one, ma, if any amount incurred for the prospecting and exploration of what, ma, minerals. These are all are, as of now, specifically covered under different sections. These are specific deductions under some sections. Now, if other sections are not there, so they given the list of deductions which are covered under section what, ma? 36 subsection 1. What is that? The list of deductions covered under section 36 subsection 1. Shall we start, Ra? Yes, I will tell you completely this provision. 36 subsection 1, ma. Yes, I will tell you completely this provision. Okay. How many points are given in the other deduction? Yes, please check it out. Q. A to Q points are there. We have to discuss this provision in depth manner. Yes, shall we? Okay, after few things I will give a break. I need also break, Ra. Okay, that's why. After 5 points we can take break. How many points, Ra? 5. Just 5 points after that we can take a break. Remember, if insurance premium paid on stores and stock means what, ma? Current assets. If you paid insurance premium, this insurance premium is expenditure, right? That expenditure you can take it as deduction under section 36(1). Suppose if you taken the fixed assets related insurance policy. Yes, 30(31). Fixed assets means what, ma? Building, plant and machinery, furniture. If you taken any insurance policy on fixed asset, that related premium can be taken as an expenditure as a deduction under section 30(31). This is only the link you have to remember. Current asset related insurance premium 36 subsection 1. Fixed assets related insurance premium 30(31). Now, second, listen. Ma, primary cooperative society is there. Within that, members are individual. Okay, one animal is there. That means milk cooperative society, example. For every member, definitely they have what, ma? Animals. They will hold some animals. So they are producing the milk. So they will give the milk to the primary cooperative society. Primary cooperative society will become the member in the federal cooperative society. Remember, in primary cooperative society, who will become the members, ma? Individual. In federal cooperative society, who are the members, ma? Primary cooperative society. Now automatically from members we can acquire the what, ma? Milk. That milk we can distribute to whom, ma? All primary cooperative society will supply to the federal cooperative society. Listen. Here, federal cooperative society taken insurance policy on life of animals or life of cattle held by the, owned by the members of cooperative society. Members of whom? Primary cooperative society. Remember, for whom it is an expenditure now? Federal cooperative society is taken insurance policy. That means every year they have to pay insurance policy premium, but they taken insurance policy on life of cattle owned by members of which cooperative society? Primary cooperative society. This is only the point you can listen. Yes, insurance premium paid by Federal Cooperative Society. For whom it is an expenditure? Federal Cooperative Society. On whom? Life of cattle owned by members of primary cooperative society. First 2 points are talking about what? Insurance premium. Now I will write it on. Okay, in 36(1), generally no need to write it on. But for our clarification purpose, in 36(1) we have to learn more points. So that's why first one, yes, I will cover A. What is that A point? Insurance premium on stores and stocks. B. Insurance premium paid by Federal Cooperative Society. Federal Cooperative Society on cattle owned by members of primary cooperative society. First 2 are what? Insurance premiums only. So shall we take third one? Third one, listen. Here also insurance premium only. But now insurance premium paid by employer on the health of employees. It is called as what? Health insurance policy premium. Who is paying? Employer. In his business, he having one expenditure, that is an health insurance policy premium. But remember, this scheme is framed by whom? General Corporation of India or IRDA. But here, if you want to take the deduction, suppose 5 staff members are there, employer taken the health insurance policy. Yes, now employer required to pay the health insurance premium in his business or profession, right? Now that amount, if he paid other than cash, then he will get deduction. If you paid in the form of cash, there is no deduction. Other than cash means anything. Account pay check, account pay demand draft, electronic clearing system, any other electronic mode, bearer check, crosser check also okay. Why? Other than cash means anything also okay. But prescribed electronic modes means how many? 4 only. Here, any mode other than cash means bearer check, crosser check also okay. Next. Very, very important analysis. If I am given an exam, health insurance policy premium paid by the employer, which section? 36(1). Accident policy premium paid by employer, that is covered in 37. Keyman insurance policy premium paid by the employer, which section? 37. Remember, insurance policy, health insurance only covered in this section. So next one, accident insurance premium, Keyman insurance policy premium, allowed as deduction in which section? 37. So nothing but accident insurance premium means in transportation sectors, employees behalf, who will take the accident insurance policy? Employer will take. Next, in any organization, key resource person is there. On behalf of him, we can take insurance policy. That is only what? Keyman insurance policy premium. Now, please tell me, in an exam, accident policy premium 37, Keyman insurance policy premium 37. Next, health insurance premium is, if it is paid other than cash, that is under section 36 subsection 1. What is that? Health insurance policy premium. Understood? So nothing but how we can pay other than. So next here just I will write it on 2. accident policy premium. Accident policy premium. Under section 30. Keyman insurance policy premium. What is that? Under section 30. Understood? Now, first 3 points related to insurance premium expenditure is allowed as deduction under section 36(1). Next one, ma. Employer will pay the salary to employee, right? My salary means, I will tell you, very important, listen. These are all the components can be called as one what, ma? Salary. Basic salary, we can give bonus or commission, allowances, perk visits, welfare contribution, retirement benefits. Listen. These are all our expenses to whom, ma? Employer. Because in his business he is paying salary, so that's why this amount will be allowed as deduction under section what, ma? 36. But please check it out. Bonus or commission only we can take in 36. Welfare contribution only we can take it as deduction under section 36. Ma, basic salary under which section you can take deduction? 37. Basic salary. Ma, anyhow you will get deduction, but different sections. Which 2 points is covered in 36(1), ma? Bonus or commission. This is only bonus or commission. Second one, welfare contribution. That is only next point. Ma, basic salary, allowances, perk visits is covered in section 37. What is that? 37. Retirement benefits. Ma, retirement benefits all are under 37, but VRS is covered in which section? Already we discussed. 35 DDA. So now you have to remember this. Many are just by heading entire salary amount is allowed as deduction under 36 or 37. Not correct. So different components of salary is an expenditure to whom? Employer. Some of the expenditures is allowed under section 36(1). Some are allowed under section 37. Some are allowed under 35 DDA. Not sum of one. What is that? VRS. Now here I will start the point. Any sum paid to bonus employees. Bonus or what, ma? Commission. If you paid bonus or commission to employee, now definitely you will get that amount as a deduction in which section, ma? 36(1). But remember, subject to 43B. Can you tell me what is that 43B, ma? Deduction allowed only if you paid. That is deduction allowed on what basis, ma? Actual payment basis. Now I will tell you. I will open 43 what, B. 43B. In future, I think we can start. This is on what, ma? 43B. Okay. In future, we'll discuss this also. Deduction. Certain deductions only allowed on what, ma? Actual payment basis. Certain means how many, ma? Yes, please check it out. G. A to G. Please tell me. First, already we discussed this one. Bonus or commission, if you want to take the deduction, yes, we can take this deduction if the this amount is actually paid to employees. Employer, if actually paid to employees, then only we can take the deduction. Yes. So under section 36(1), simply, if you want to take this amount under section 36(1), 43B, one condition required to satisfy. That is what, deduction allowed on actual payment basis. Deduction is allowed on what, ma? Actual payment basis. Listen. Some cases, private companies will follow this. If they are given the dividend to the Yes, shareholder, that is taxed under IFOS. But now what they will do, they will not give the dividend. Yes, instead of dividend, they are giving it as an what ma? Bonus or commission. Why? If we are giving it as a dividend, dividend is an allowable expenditure? No. Simply company is distributing dividend to shareholders. Shareholders hands it is taxable, but company hands is there any deduction with respect to dividend? No. So that's why they are actually paying dividend only, but they will show it as an what ma? Bonus or commission. Private company issued the bonus to their employees instead of giving the what ma? Dividend. It is allowed as deduction, not allowed, not allowed. What is the reason, if you want to genuinely give the dividend, please give it as a dividend only. If you want to give the genuinely what bonus or commission, please give it us. Instead of, that means actually we want to give the dividend, but I will cancel it and I will show it as an what I am given the bonus or commission to this. That is incorrect. Now I will tell you this point only. If you are given the bonus or commission, yes bonus or commission also you can't take it as what deduction, because you are intentionally showing as an what bonus or commission, but actually you are paying what dividend. Bonus to directors also what allow. Simple point. If you given the bonus or commission to your employees, allowed as a deduction in your hands, and in your employee hands it is taxable under what salary. But if you given the bonus or commission instead of dividend, can I take it as deduction? No. They will not give any deduction under which section? 36 subsection 1. Can you tell me D point, right? What is a D point? Tell me, bonus or commission paid to employees. Remember, within the bracket what based on section 43B basis. Deduction is allowed if you paid actually to the employees. Now, next point, welfare contribution. What is that? Very important. Listen carefully. After this, I will give back. Welfare contribution. Welfare contribution, different examples are there, but I will take the provident fund as an example. Okay. Sir, one employee joined in your organization under 22 years of age. Now his age is 60. How many years of working he done? How many years of work? Nearly 36 years of service is done in your company. What is the company name? ABC Limited. My average salary just I taken. So if you given the monthly 20,000, what is the position? He will expend it that entire 20,000 in a month and he will wait for the next month salary. So now what is that welfare you created for him? He given 36 years of service for you, just you given the salary, that's enough? No. So that's why there is a welfare contribution after retirement also. Definitely, yes, employees needs to secure their life. So that's why the PF concept is introduced. Now, we can open the provident fund account in the name of employee. I will deduct the every month some amount from the employee's salary, that is employee contribution to provident fund. Can you tell me what is that contribution we done to the provident fund every month? 2,000. Sir, I deducted from your salary, I deposited in your account only. Then what is the new thing? Equal and opposite contribution can be done by whom? Employer. Employer will contribute his own contribution. Example, every month how much? 2,000 from your side, and opposite amount will be contributed by the employer from his own pocket. So now definitely every month how much amount saving in this account? 4,000 per month. So that means 4,000 per month. Per annum 48,000. Like 36 years if you counted, 17,28,000 amount is deposited. And huge amount of interest also will accumulate if you are keeping that money in the provident fund account. That means your life is saved after retirement also, right? Now, finally, on this interest also will be accumulated. This amount will be given to whom? Employee. This amount will be given to whom? Employee. Please tell me, yes, yes, yes. Your contribution you deposited in your account, but indirectly that fellow deducting, that fellow depositing on behalf of you. Can you tell me it is income or savings? Savings. Are simple, okay, you taken 10,000 from my pocket, you deposited in my account only, it is my income or savings? Savings. That means from your pocket your employer is taken your salary only, he deducting and he deposited in your provident fund account, that is savings. On this you will get what? Chapter 6A deduction under heading C. Yes, remember we have 4 types of provident fund. What are the 4 types of provident fund if you have an idea? Statutory provident fund, recognized provident fund, unrecognized provident fund, public provident fund. ATC, self contribution. So that means what is that contribution? Self contribution. If anything is done, ATC available. Here also ATC available. Here ATC is not available. Here ATC is what? Available. Here why ATC is not available? It is unrecognized by the Commissioner of Income Tax. So that's why they are not allowing to take the ATC deduction. Understood all of you? Self contribution means SSC is contributing. That means directly or indirectly? Indirectly. Your employer deducting from your salary, he deposited in your account only. This is called as what? Savings. That's why you will get ATC. But because it is not recognized by the income tax, that's why ATC is not available. Now, please think from employer point of view. In his business, now he is incurring some expenditure in terms of provident fund. For you, I am depositing every month 2,000. Every year 2,000, 24,000. That means finally this amount is taken by whom? Employee, including interest. That's why this is an income taxable under the head what? Salary. Now here, employer contribution. What is that? Employer contribution. For an employer, it is an expenditure or income? Expenditure. That's why you can take it as deduction under section 36(1), but subject to what? 43B. In 43B already we discussed one point. What is that? Bonus or commission. Now we can open whether employer contribution is there or not. We can check. Whose contribution? Employee or employer? Yes, employer contribution to welfare schemes. If you want to take this amount as a deduction, definitely it must be paid on or before what? Return of income due date. Actual payment basis, what is the date also they given? Payment must be made on or before due date of an return of income. Okay, that's okay. Next we can proceed with the another one. It is expenditure. That's why employer is taking the deduction. Next, employee contribution. Okay, you are an employee. I am an employer. I deducted some amount from your salary. I am depositing that in your provident fund account. Now, why I need to give the deduction for this? Remember, it is an expenditure. That's why deduction given. For whom? Employer. But it is not an expenditure for employer, right? Which one is an expenditure to employer? Employer contribution. Employee contribution is not a expenditure. But why we can take deduction? Listen. 4,000 employees are there. How many? 4,000. Every month, 2,000 I will deduct from their salary. That means now in my hand 80 lakh amount is available. How much? 80 lakh. Can I use this amount without depositing for working capital purpose? Yes, you can use. Now department required to control you. How, sir? Once you deducted from the employee's salary, that is your income. That means now in income from other sources, I will add 80 lakh to your income. You have to pay tax on this also. Sir, 80 lakh they are adding to income, sir. That means on 80 lakh you have to pay tax also. That's why department saying that if you deposited within the due dates, if you deposited within the what ma? Due dates under Provident Fund Acts. What is the due date? Next month on or before 15th. Next month what ma? On or before what ma? 15th. Again I am saying it is expenditure for employer. It is what? Expenditure for employer. So that's why employer can take deduction directly. But 43B due date we have to check. What is the due date? On or before return of income due date under section 139 subsection 1. Second one, for controlling purpose I will add this 80 lakh to your income because 4,000 employees into 2,000. Once you deposited within this due date, sir, this month April, right? April month deductions amount you have to deposit next month 15th means what ma? May month on or before 15th. Then you will get what ma? Deduction. Sir, for what purpose we are adding to income and we are giving the deduction for controlling purpose. For what purpose ma? Controlling purpose. Amma understood all of you. Sir, welfare contributions is very, very important. Yes. For your contribution, you will get chapter 6A deduction. For your contribution, you will get chapter 6A deduction because you are only saving some amount in Provident Fund account. So not for all Provident Fund. What are that? Statutory, recognized, public Provident Fund. Sir, employee contribution, okay. Employer contribution is expenditure. So that's why he can take it as deduction directly under section 43B. Yes, what is that ma? Return of income on or before due date, you should pay. Actually, if you paid on or before due date, then you will get deduction. But remember, employee contribution for controlling purposes, we can say, for controlling purposes, we can add it to income. If deposited within the due date, that is allowed as deduction. In exam, always you have to remember employer contribution, 43B due dates. Employee contribution, relevant act due dates. Ma understood? Now what is the point? I will write it down here. Tell me. E. Welfare contributions. So now I want to know welfare contribution means nothing but employer. What due dates we have to check? Section 43B I have to check. Yes, return of income due date under section 139(1). Employee contribution, please tell me. For controlling purpose only we can do. Yes, can you tell me? For controlling purpose only we can do. Tell me. Ma? Relevant act due dates. Relevant act due dates. Ma understood? So directly you will get deduction if you paid on or before the due date under return of income 139(1) as per section 43B actual payment basis. Controlling purpose but added to income. Then after, if you paid before relevant act due dates, you will get deduction. Clear? So please take the 10 to 15 minutes break. Then I will proceed with the remaining part of 36(1). If you know the 36(1), okay, I will show you one or two glimpse. Then after you can awake from the sleep also. After showing everything, you can awake from the sleep, or definitely I will show you. Not only one question, in every question we can show. Yes, you can see these lines, huh? Employee contribution, employer contribution. So 2 marks, 2 adjustments. Yes, not only this question, right? Employer contribution, employee contribution to provident fund. In 36(1), every adjustment is important. If you understood this adjustment, then only we can do the problems. So insurance premium points 3 covered. Next we discussed bonus or commission 43B, employer contribution 43B, employee contribution, that is relevant act, due dates. Okay, we can meet around at 4. Okay. Yes, ma'am. Next. Yes, you can observe in 36 subsection 1, 5 points we discussed. Sixth one, employer contribution to pension scheme of 80 CCD. Pension scheme of what, ma? 80 CCD. So, this is only we can call it as NPS, Notified Pension Scheme. Yes, both, yes, ma, employee will contribute, employer also will contribute. Ultimately, this amount will be taken by whom, ma? Employee. Yes, employee contribution will be there, but employer contribution is an expenditure to whom? Employer. Now, employer will take the deduction. Then what about employee contribution, sir? He will get deduction under section 80 CCD, chapter 6A deduction. What is that? He will take chapter 6A deduction. So, finally, that amount will be allocated to whom? Employee. So how much amount of deduction, sir? Whatever you contributed, employer contributed, or 14% of what, ma? Salary. What is that? 14% of salary. Suppose he contributed 3 lakh. How much, ma? 3 lakh. Yes. Okay. Employer contributed to this scheme 3 lakh. Salary amount, please calculate. Salary means nothing but definition is what, ma? Basic salary plus DA forming part of retirement benefits. Basic salary plus dearness allowance forming part of retirement benefits. Another words, terms of employment also they can given. So on that, please calculate 14%. Suppose if it is 2,80,000. So now how much amount of deduction we can get, ma? 2,80,000. How much? 2,80,000. Understood all of you? Yes. So this is a normal point. Yes, we can write it down. What is that, ma? F point. Yes, can you tell me? Employer contribution to, yes, ma? NPS account under section 80 CCD. 80 CCD. Done. What is that? 80 CCD. Next one. Interest on borrowed capital. Somewhat we know already. What is that, ma? Interest on borrowed capital. Please let me know. Yes. If you taken any loan, if you taken what, ma? Any loan. If that loan amount used for business or profession purpose, remember business or profession purpose means, remember, it can be used for working capital purpose also, or it can be used for the purchase of an asset purpose also. That means what, ma? Capital assets acquisition purpose we can use, or working capital purposes also you can use. Any purpose. Now, if you are paying interest to others, so there is no concept of notional interest. So completely if you are paying this interest to others, then you can take the deduction under 36 subsection 1, yes, entire amount of interest. In case of sole proprietorship concern, If interest paid to sole proprietor, it is treated as what ma? Simply notional interest. That means yourself you are paying interest. That is allowed or not allowed ma? Not allowed. Clearly, this point clearly saying as an what? Interest paid to others. Next, in case of partnership firm, partners given the loan to the partnership firm, here you can take the deduction. That means partnership firm can take the deduction, but how much extent ma? 12% per annum on capital contributed by the, yes, capital contributed by the whom ma? Partners. The same point we'll discuss in the 40B also. So in assessment of various entities, assessment of partnership firm will discuss. On that occasion, we can discuss this is also assessment of what ma? Partnership firm. Okay. Sir, suppose I paid 18% interest. How much is allowed? 12%. Excess, how much I paid? 6%. That is what disallowed. That means maximum interest on capitals by the partnership firm to the partners. How much ma? 12% only. Next one, if you are paying interest to your relatives, allowed or not allowed? Outsiders, allowed only, but subject to 48.2. What is a 48.2? For relatives, you should pay up to the fair market value. Excess over fair market value shall be what? Disallowed. So market rate of interest is 12%. You can pay 12%, no problem. If you paid 15, how much is disallowed? 3% extent is disallowed, 12% is allowed. Next, in case of genuine borrowings, some cases, yes, you taken loan genuinely. In such a case, if that interest rate high also, no problem. AO cannot object. AO can be directly allowed this amount. Remember, if it is genuine. If it is what ma? Genuine. Definitely interest amount or high also, interest rate high also, it can be allowed. Now, you know already, if any loan we are taken for acquisition of asset up to first to put to use, yes, whatever that interest that must be capitalized, added to asset cost, on that we can claim what ma? Depreciation. After put to use, if any amount of interest is there, that is treated as revenue expenditure, that is allowed as deduction under section 36(1). This is only 36(1). So next, remember, interest if anything is paid to the public financial institutions or NBFC scheduled bank, it is allowed only, but subject to what ma? 43B. Now we can check 43B whether this payment is covered in that section or not. Yes. Interest paid to what? Please check it out. Third point. Interest paid to, yes ma? Public financial institutions. Yes. State financial corporation, industrial investment corporation, scheduled bank, cooperative banks, NBFCs, it is allowed under section 36(1). But what is the condition they mention? If you paid on or before the what ma? Due date under section 43B. Understood all of you? Yes. Remember, interest on borrowed capital. Yes, nothing but what ma? E. After that, F, G. What is that ma? Interest on borrowed capital. Interest on what ma? Borrowed capital is allowed under section 36(1). Next one, right? So what is that point number ma? H. F also over, G also over, now H. Deduction with respect to animals used in business otherwise than stock in trade. Can you tell me? Other than stock in trade means now we are using these as an what? Assets. That means other than stock in trade means now you are using these on what? Asset. So generally on assets you can claim what? Depreciation. But if you observe in nature of assets, from plant and machinery, we excluded livestock and tea bushes. That means you can't get depreciation on the livestock. That's why they given 36(1) deduction. Yes, if any animals used in your business as an assets. Now I will tell you simple example for poultry farm. Hence our assets are stock in trade. Stock in trade. We are selling that hence only in poultry business, stock in trade. So for dairy farm, animals are assets. So now in dairy farm, on that assets, you can take deduction. Buffaloes and cows, if anything is there, on that you can take deduction, not depreciation. Depreciation we can't claim on livestock. We excluded from plant and machinery also, if you observe. What is the deduction you can get? Yes, in the year in which animal died, or if that animal is permanently useless, in that year you can take deduction. What is that amount of deduction you can take? Actual cost. Suppose I purchased it for 80,000. If it is died or if it is permanently useless, I sold it for 5,000. Now what is that? 75,000. In this year you can take it as what? Deduction. If you sold dead body, if you sold that animal, yes, you received 5 lakh scrap amount. Yes, that you can reduce from the cost of animal. What is the net cost for you? 75,000. You can take it as deduction. Or you have to understood in olden days, yes, there is no vehicles on that time. Yes, animals only the transportation purpose we are using as an what? Vehicles purpose assets. That's why on that time it is a famous deduction, not now. Clear? Yes. Next one, yes, now I have to write it down. Okay. What is that? H. What is that H? Animals. Deduction with respect to animals used as assets. Understood? Next, listen carefully. Yes, it is discount on zero coupon bonds. Yes, in examination sometimes they given zero coupon bonds meaning. Can you tell me in our Income Tax Act 1961, zero coupon bonds meaning given in which section? 2 subsection 48. Which section? 2 subsection 48. So meaning of zero coupon bonds given in 2 subsection 48. Now I will tell you what do you mean by the zero coupon bonds? Issued at a discount. Sir, there is no interest on such bonds. Then why investors will attract towards this? They will issue at what? Discount. Okay. After 5 years or 10 years based on life of such bonds, they will redeem at what? Par. If you observe as an investor point of view, his investment appreciated or not? Yes. Investor point of view, capital gain will attract, but issuer point of view, issuer is incurring expenditure of how much? 30. Issuer incurred expenditure of rupees 30. That means on every bond, he has to pay 30 rupees. This 30 gain to him, this 30 is an expenditure to him. Now, if anything is an expenditure to issuer, who is an issuer? Company. That is allowed as deduction under 36(1). On what basis? Pro rata basis on life of such bonds. Now, I will tell you what do you mean by the life of such bonds? Yes, date of issue to. Date of issue to date of redemption. Ma, remember, in months you have to calculate, not in years. In months you have to calculate. While calculating the dates, if more than 15 days, you can consider equal to or more than 15 days, it is completely 1 month. Less than 15 days, you can ignore. So now I will give you one simple example. Yes, ma. Issue date, Jan 2020 first date. Redemption date, August 21st, yes ma, June 2000, August 2025. Sir, August month, how many days are? 21. More than 15 days? Yes. So that's why I rounded off to 68 months. Generally, if you observe 1st August to, yes ma, 1st January to 1st August, 67 months only. But in last month, how many days are there? More than or equal to 15, right? So that's why you can count it as a next 1 month. Entirely how many months, ma? 68. Remember, please calculate the life of such bonds in number of months. Discount, how much, ma? Suppose 10 lakh. 68 months means how much per month? 14,706. Suppose if the discount entirely on such bonds is 10 lakh, every month how much we calculated? Ma, remember, in 1920, how many months? January, February, March. 3 months only, right? In 1920, 3 months. In remaining years, 12 months. In remaining year, 12 months. 25, 26, April, May, June, July, August. How many months? 5 months. Please multiply with the 5 months. So nothing but pro rata basis means, are you understood? Now, first year this amount of deduction, next 5 years same amount of deduction, last year this amount of deduction, you will get it under section 36 subsection 1. So remember, on pro rata basis means, please calculate number of months from the issue date to redemption date. If the period is more than 15 days, that can be counted to next month. Yes, every month how much you have to calculate. In every year how many months also. Can you tell me 1920, 3 months? Next year always 12 months. Last, can you tell me how many months? 5 months. Ma, you understood this example? Discount on what, ma? Zero coupon bonds. Very, very, very important. Many students doesn't know about the how to calculate the discount on zero coupon bonds on pro rata basis. That is discount on zero coupon bonds. Remember, from our issuer point of view, we checked. If investor point of view, if we check, he has to calculate capital gain. He has to check what, ma? Capital gain. Understood all of you? Yes, online, please tell me. Online, please tell me. Now, next point, family planning expenditure. Array, in every exam, they are going to give this adjustment. In comprehensive questions also, you can see this adjustment. Listen carefully. My family planning expenditure, that means from our side, we are doing some family planning promotions. So now it is an expenditure. But this expenditure incurred by every SSC. But now in PGBP, they are given deduction only to companies. That may be foreign companies or Indian companies. Ma 35D only for Indian companies. 35D means preliminary expenditure for Indian company only. Yes. Next, we have one more 35DDA, amortization of amalgamation as well as demerger expenditure. That is also for Indian company. So if you observe family planning expenditure, if that deduction, if you want to take, you have to check whether SSC is an company or not. Yes, how much amount of deduction you can take? Revenue expenditure, directly you can take the amount of an expenditure in the year of incurrence. Capital expenditure, maybe huge amount of capital expenditure you can incur. So that's why they are saying, please allow in how many installments, ma? 5. This deduction, revenue as well as what, ma? Capital expenditure, you can take it as deduction only to the extent of profits availability. You can absorb to the extent of profits. To the extent of profits. If profits are not there, profits are insufficient, then you will get what, ma? Unabsorbed family planning revenue also, unabsorbed family planning capital also. The same treatment we can follow like what, ma? Unabsorbed depreciation. Now please tell me, in this chapter, we discussed 3 unabsorbed. First one, unabsorbed depreciation. Unabsorbed scientific research, capital expenditure. Unabsorbed family planning expenditure. So same treatment we can follow like what, ma? Unabsorbed depreciation. Now what is that? HIJ. What is that, Jera? Family planning expenditure. Family planning what, ma? Expenditure. Next. Yes, very important in this section. Yes, always I will say, please remember 36.1. Please remember what, ma? 36.1. Please remember what, ma? 36.1. But alone this point, please remember clause also 36.1 clause what, 7. 36 subsection 1 clause 7, please remember. Yes, deduction of what, bad debts. Ma, if you have any bad debts, you can take deduction. Under which section? 36 subsection 1 clause 7. Sir, when you can claim the bad debts as a deduction, ma? If the following conditions are satisfied. How many conditions, ma? 4. If that, ma, I given some amount to my friend as a debtor, that becomes bad. Can I take deduction in my business? No. The debt must be related to business or profession, and that is bad means you have to written off in your books of account. If you written off in your books of account means you don't have any hopes about recovery. So that's why you are cancelling that as a debt in your books. Second condition, earlier year, if you taken into that computing that income, sir, earlier year that is included in our income. Now, example, I am doing credit sales. Okay, last year I am doing credits. I done credit sales. So in sales amount it is already included, means that is considered as an income in earlier years. Now that credit sales related debtors only, credit sales related debtors only, now they are not paying. So that's why, yes, now you can claim it as what, bad debt. Remember, I am selling goods, I am selling fixed assets. Both are becomes bad. Credit sales done, goods related also, fixed assets also. Now what I need to consider, revenue nature bad debts only I need to consider, not related to sale of fixed assets. Example, what is the reason? Ma, if you are done the sale of fixed asset, it is not included in sales. What included in the sales? Sale of goods value only included in sales. If you are taken trading and P&L account, what is the sales amount, ma? Sale of fixed assets or sale of goods? Sale of goods. Then you can take deduction here. If it is sale of fixed asset, is an extraordinary item, it is different treatment. Next, in case of money lending business, so debt must be related to what, ma? Loans and advances. For banks, what is a bad debt? Whatever the loan given, whatever the advances given, if that is not paid by the customers, that is only what, ma? Bad debt. Remember, very important, provision for bad debts is always what, disallowed. But provisions is allowed only for whom? Banks. That I will tell you. Next provision only, I think what, 36 subsection what, ma? 7a. Banks only can take the provision for bad debts as a deduction. Remaining, that means our institute, shikharatutorials, you can take actual bad debts as a deduction. But provision for bad debts, if anything created in your P&L account, you can't take that as a deduction. Provision for bad debts is allowed only for whom? Banks. Provision for bad debts for others, it is what? Disallowed. Understood all of you? If those 4 conditions are satisfied, bad debts you can take it as deduction. Bad debts you can take it as deduction. Please repeat conditions. It must be related to business or profession. It must be written up in the books of account. It must be taken into the account while computing that income of the present year or earlier years. And it must be related to the revenue nature, that is sale of goods. In case of banks or financial institution, the bad debt must be related to the loans and advances given by the bank or financial institution. Provision for bad debts is allowed. Provision for bad debts is allowed, disallowed. Provision for bad debts is allowed only for whom? Banks. Next, some examples. These examples are very important. Listen. Father doing business in 20 to 23, he done credit sales. One debtor created. Father given the business to son. Now, who is an predecessor? Father. Who is an successor? Son. Now, debt created by the predecessor, but that becomes bad in the hands of whom? Successor. Possible? Yes. In bit on that time, father doing the business, he is doing credit sales. Now, okay, example, yes, Mr. X is there. Mr. X taken the credit sales from this person, but now he is waiting for recovery. But clearly he identified that is an bad debt. Now, Mr. X doesn't have any intention to repay that amount to Mr. Son. Now remember, if all the conditions are satisfied, can he take deduction? Yes. Why? If debt created by the predecessor, if that is bad in the hands of successor, deduction we can take. But condition is business or profession must be in continuation. Here business or profession is continued, but managing the business or profession person only changed from the predecessor to successor. That is only the point. Please listen carefully. Successor of business or profession entitled to claim the deduction in respect of bad debts created by the whom? Predecessor. Understood all of you? Bad debts conditions we discussed. Then after we are discussing the note point, predecessor created debts, if becomes bad in the hands of successor, yes, we can take the deduction. Now, a lifetime important point. Now we are going to discuss. Yes. I will take the 2 examples. Based on these 2 examples, I will read the provision. Mr. F in 21-22, for Mr. F who is a debtor, Mr. X. In 23-24, my debt created in which year? 21-22. In 23-24, we clearly identified this is a bad debt. All the conditions are satisfied. That's why we taken bad debt as a deduction under this section 36 subsection 1 class 7. Now, in this year, what happened to the net profit or PCBP? Reduced. But in that, next year's bad debts amount is recovered. We written off that bad debts, we claimed deduction, net profit reduced, now bad debts recovery done. Now, in the year of recovery, bad debts is taxable under deemed profit. Earlier year deduction, now we want to reverse. For that, which section we have to use? 41. Earlier year deductions or expenses, if anything is there, if you want to reverse, you have to use section 41. That is only we used. But remember, if it was allowed as deduction in earlier years, now recovered amount is taxable. Okay, case B I will talk. Listen carefully. Mr. F, debtor whose Mr. X, in which year that is created? 21-22. Now that becomes bad in this year. So, but conditions are not satisfied. We didn't give any deduction. Net profit is what? Increased. Now recovery happened. Here we are not giving deduction, means already it is taxed in this year, right? Yes, ma, 10 lakh already tax. Now in the year of recovery, do I need to pay any tax, ra? No. What is the sentence we have to learn, ra? Recovery of bad debts is taxable under the head PCBP in the year of recovery. What is the condition, ma? If it was allowed as deduction in earlier years. If it was allowed as deduction in earlier years. What is the section number? Please remember this also. 41(4). Remember, recovery of bad debts is taxable in the year of recovery if it was allowed as deduction in earlier years. Here, recovery of bad debts is not taxable in the year of recovery. Why? Earlier year it is not allowed. If it was allowed, net profit reduced on that time. Now we have to increase. If it was not allowed, already taxed. Now no need to tax. Understood all of you? Sir, recovery of bad debts is very important. Now bad debt section number 36 subsection 1 class 7. Provision for bad debts is disallowed. Provision for bad debts is allowed for banks or financial institution. That is only next section. Section 36 subsection 1 class 7A. Now one MCQ. I am taken this MCQ from CA final material. At any time you will get this also. Just listen carefully. Now, previous year, what is that? 24-25. Actually, how much bad debts is there in your hands? 70. You want to claim 75,000 as a deduction. But AO given how much deduction? 40. You want to claim how much, ma? 70. But AO given deduction how much, ma? 40. That means 75,000 you want to take. 40 only deduction. That means how much is already taxed? 35. Ma, actually bad debt 75, but the given deduction 40 means what is the taxable portion on that time? 35. Now, next year what happened, ma? 25-26 recovery happened. How much recovery happened? 44. Recovery of bad debts is taxable in the year of recovery. If it was allowed as deduction in what, ma? Earlier years. Here deduction given, yes, given. But, okay. Completely 44 can I tax, ra? No. Why, ra? To that extent of already how much taxed, ra? 35. How much already taxed? 35. Do I need to tax again? No. Please reduce. Now how much required to tax, ra? 9,000 only tax. Ma, in the year of recovery, we want to create the taxability of this amount, right? We want to create the taxability for this amount. Okay, we can create taxability, but entire amount, how it will be taxable? Because already in last year, how much tax? 35. Now extra how much recovered? 9,000. That 9,000 only now it will be taxable. Out of recovery amount of 44,000, 35,000 already taxed in the last year. Now balance 9,000 only taxable in the year of what, ma? Recovery. Sir, it is logically, if you read these entire sentences, then only you will get an idea. First, you have to identify, you filed return with the 75,000 bad debts. But they given how much deduction? 40. How much they disallowed? 35. If they disallowed 35 means already how much tax? 35. In the year of recovery, 44 related, I am ready to pay the tax. But already how much I paid? 35. That's why balance only will tax here. Understood online? So most visiting students, so continuously I think you don't have energy to listen for 1 hour also. Okay, I am not asking about the visitors. I am asking about the who are seriously listen from the morning towards now. Are you understood the recovery of bad debts? Are you understood? Bad debts is allowed as deduction under section 36 subsection 1 clause 7. H, J, H. Okay, na, sorry. Bad debts is allowed as deduction under section 36 subsection 1 clause 7, because in exam also they can ask this. Please try to remember. Now next L, what is that L? Super. Provision for bad debts. Provision for bad debts is allowed deduction only for banks. What is that? Section 36 subsection 1 class 7. Done. Okay. Ma, you have to remember some more points here after. Listen. Provision norms is given in Banking Regulation Acts, right? You know, I think in your accounting itself, NBFC provisioning norms, banking provisioning norms, standard asset, substandard asset, because in Act itself, they given the provisioning norms. So that's why income tax also saying that if any provision you created for the banks, NBFCs, yes, you can take it as deduction. But they concentrated on the Indian banks, Indian scheduled banks, non-scheduled banks, cooperative banks, and please exclude these two cooperative banks. Please exclude these two cooperative banks. In this case, you created provision, but we can give the deduction only this much. Whatever you created provision, entire provision I will not give deduction. To this extent only I will give deduction. How to calculate that? You have a gross total income for your bank, right? On that gross total income, 8.5% maximum I can give deduction. Suppose they created provision 10 crores. If you calculate it, it is only 8 crores. Now how much deduction? 8 crores. Maximum 8.5% of gross total income. But rural branch risk is very high, right? So that's why here we can create more and more provision. Urban related, there is proper repayment. In rural, maybe there is a risk of taking the recovery. So that's why here you can take what, 10%. So these numbers you have to remember. If you calculated this, you will get 8 crores. But actually provision created for 10 crore. Now how much allowed? 8 crore. This is for Indian scheduled bank, non-scheduled bank, cooperative banks. Next, foreign banks, public financial institution, state in financial corporation, state industrial investment corporation, NBFC, just 5%. Why? In this case, there is a risk. Normally for government banks, non-recovery rate of the loans and advances is high. That's why this percentage. They will always take care properly. Foreign banks, financial institution, NBFCs, they will take care proper steps. There is a high chances of recovery. So that's why provision you can create only for maximum how much? 5%. Now, here gross total income means. What is a gross total income? Income before 36(7)(a). Before this provision of deduction and chapter 6A reduction, you have to calculate. Gross total income means before chapter 6A only. We don't know this deduction, right? So that's why before taking this deduction, whatever that income is there, that is only gross total income. Clear? Yes, what is that? Provision also we discussed. Provision only for banks, unlimited amount or limited amount, limited amount, generally 8% of gross total income, 10% of aggregate advances made by rural branch. Clear? Next, transfer to special reserve. Transfer to what? Special reserve. Listen carefully. Special reserve means what? Anything. Okay? Anything. But if you transfer certain amount of your profits to special reserve, you will get deduction. Suppose 100 lakh I have, I transfer to the, I have an 100 lakh profit, I transfer 8 lakh to the special reserve. Now deduction how much ma? 8 lakh. Now I required to pay tax on how much ma? 92 lakh only. That means if you transfer any amount to the special reserve, you will get deduction. Sir, if this provision is there, every person will transfer their profits to the reserves, right? Without payment of tax. That means if any amount transfer, definitely we can get what ma? Deduction. Right? But this deduction is given only to the whom? Foreign corporations engaged in the long-term finance. What do you mean by the long-term finance? 5 years or more. If you are giving the loans and advances for 5 years or more duration, that is an long-term finance. Simply foreign companies engaged in the providing long-term finance, then only they can transfer certain profits to the resource and they can take the deduction. Amount of deduction is how much? Lower of the three things. First one, the amount transferred to the special reserve, 20% of PCBP before this deduction, 200% of paid up share capital plus general reserve. Remember 200% of this minus opening balance in special reserve. Out of these three, whichever is lower. My last one, this one you have to remember. There is no shortcut. Okay, if they given MCQ, or that's okay. Otherwise, they will not test. Now, I transfer to special reserve means you have to utilize this amount for the specific purposes mentioned in the schemes. If you misutilize these things, then it is here present year you taken deduction under 36(1). Next year you violated. Now next year how can I reverse this deduction? By using section 41 subsection 4A. What is the 4? Bad debts recovery. Section 41(4) is bad debts recovery. Now section 41(4A) amount transferred to special reserve. Understood? Yes. KLM. Thank you. Amount transferred to special reserve. Done. Now check it out. Next, purchase of sugar cane. We are in climax of this provision. And after that, shall we take a long break? No. Purchase of sugar cane. This deduction only for the cooperative societies who are doing the manufacturing of sugar. For manufacturing of sugar, definitely, which is raw material, sugar cane. If they purchased raw material, yes, sugar cane, definitely they have to take this raw material in the P&L debit side, right? How much amount they can take it as deduction? Purchase of sugar cane for manufacturing sugar. Simply, this price, sir, here we want to take the more and more amount. Why? If you take more and more amount, net profit or PCBP will reduce. Net profit or PCBP will reduce. Right? That's why clearly they are saying government fixed price is there. Equal to you can take. Less you can take, no problem. Less if you taken, that is beneficial to department, right? So that's why clearly government fixed price or government approved price, for that you should take the less than or equal to. Equal to you can take, less also you can take, but you should not take more. So what is that? Purchase of sugar cane. So can you tell me for whom cooperative society engaged in the manufacturing of sugar, they need to purchase the sugar cane from the farmers? Yes, farmers. Now how much amount of deduction they can take? So that amount of deduction should be equal to or less than the government price. What is the end point? NN purchase of sugar cane. Next. Security transaction tax. But remember, if I purchased any listed shares, listed equity shares, where can I transfer that listed equity shares? Purchase or sale also I should done in recognized stock exchanges. At the time of purchase or at the time of sale, for that recognized stock exchanges, you have to pay one type of tax, that is only security transaction tax. For listed securities only it will be applicable. Okay. Listed securities, I have listed shares or any securities. I am held it as a stock in trade. Stock in trade means regularly I will sell and I will purchase. Sale, purchase, sale, these things. If any profit I got, because in my hand these are stock in trade. If any profit I got, it is taxable under which head? PCBP. Super. What is that? PCBP. Now, here you are required to pay. That means you are transferring the purchase, you are transferring the listed equity shares or securities, right? On that occasion, you are required to pay what? STT. So now this STT will be allowed as deduction under section 36(1). Suppose if you held this as an capital asset, sir, if you transfer this capital asset, you have to calculate what? Capital gain. But remember, while calculating this capital gain, this is not allowed as deduction. So if you observe in capital gain chapter, gross sale consideration minus transfer expenses. In transfer expenses, you can take brokerage, commission, everything, but you can't take STT. STT is allowed in which head? PCBP. STT is not allowed in which head? Capital gains. Remember, in capital gains also, I told this point for you. Commodity transaction tax. What is that, Commodity transaction tax. PIRA, penultimate one. Commodity transaction tax. That means on some commodities trading like paddy, gold, silver, etc. On that commodities, if you are trading, this will be taxable under PCBP because these commodities are stock in trade means. On that occasion, you have to pay the CTT, commodity transaction tax. That is allowed as deduction under section 36(1). That means in PCBP, while you are computing PCBP income, security transaction tax, you can take it as deduction. Commodity transaction tax also you can take it as deduction. But if you are computing capital gain income, STT is not allowed as deduction. So purchase of sugarcane, after that we discussed how many points? NO, KLMNO. O is what? Security transaction tax. STT, P, CTT, last one, Q, E, last point. Mark to market loss. What is that? Mark to market loss or expected loss. It is not a realized loss. My example, I purchased a share at 100 rupees. I don't want to sell that share now. But now market value is 80 rupees. What is my expected loss? 20 rupees. Because I purchased at 100, now market price of that share is 80. Now what is that expecting loss? If really I sold, what is that exact loss? 20. Expected loss, mark to market loss, yes. If it is computed as per income computation disclosure standards, allowed. As per ICDS, if mark to market loss, if you computed, that is allowed. In case of others, not allowed. In future, we can see this section clearly in this section. Yes, mark to disallowances. 40 section means disallowances. In 40A subsection 13, they are saying clearly, if you compute it as per ICDS, okay. Other than that, any mark to market losses or expected losses is there. That is directly they are saying what ma? Disallowed. What is that ma? Disallowed. What is that point mark Q? Mark to market, market to market, market to market, or what ma? Expected loss. What is that? Expected loss. Now listen carefully. As of now, 36(1) other deductions is over. Specific deductions we discussed in section 32, 33, 35. Yes, then after we discussed other deduction. Now, after other deductions, we have an 21st section in this chapter. What is that? General deductions. What is that? General deductions. Section 37, yes ma, general deductions. Listen carefully. 36 season 1, definitely you can get 2 or 3 adjustments in comprehensive question. In 37 also, you will get comprehensive questions related adjustments. After this, I will give you short break again. Okay, after section 37 discussion, I will give you 10 to 15 minutes break again. But we have to take care the more provisions today. Tomorrow we can discuss the comprehensive questions. This is in part 1. Tomorrow we can discuss part 2, comprehensive questions. But I want to give you which adjustments they are given recurringly in our exam. We have to practice those adjustments also. So we can discuss the question and answers tomorrow. If 1 or 2 provisions pending also, we can discuss tomorrow. But after 37, I will give you break. After that, depends upon our energy, we can start. Now, 37 is what? Other deductions, sorry, general deduction. It is called as which section ma? Residuary. Now online, please tell me, you understood what I am saying now? Now, after 37, we can take a short break. After that, okay, based on our energy, we can start the remaining things also. Now, but I can revise overallly, this is important, this is unimportant, like that. I can revise entire things within 3 hours also, possible. But that will be understand only for me, not for all of you. Okay, you also will be satisfied, okay, sir told Pgbp chapter. But it is the biggest chapter in the entire income tax. Okay. If you followed this revision class, that whatever the Evo batch I uploaded in this YouTube, definitely you can solve the questions. Yes. If following conditions are satisfied, yes, how many conditions they given ma? A to G. Then this expenditure will be allowed as deduction under section 37. Because this expenditure is not covered in specific deduction. This expenditure is not covered in other deduction. Now how we can take this deduction? General deduction. But all we can take it as a general deduction, not correct. Specifically, I will tell you conditions. If all the conditions are satisfied, you can take that expenditure in section 37. Now first one, that's why I'm calling it as what ma? Residuary. Simply one expenditure not having the place in specific deductions, not having the place in other deduction. Now, if the conditions are satisfied, that you can take in the 37. General deduction. First one ma, it is not covered under 30 to 36. Why? If it is covered under 30 to 36, we can take deduction here in that place only. Why we need to come for 37? It should be incurred by SSC. If other person incurred the expenditure, we can't give deduction. If you incur, then you can take deduction. Expenditure incurred on or after commencement of business. Why? If it is before commencement of business, we have an 35D. Anna. What is a 35D? Preliminary expenditure. If it is incurred on or after commencement only, then we can take section 37. Next, it should be not in personal nature. Ma? It should not in personal nature. It should be incurred wholly and exclusively for business purpose. These two things are one and the same, right? Why they given both the points? Are not an personal means it is an business only, right? Ma, if it is not an personal, it is business only. No. I will tell you example. You given donation to the charitable trust. It is personal expenditure? No. It is related to business? No. That's why you have to check both the conditions separately. Donation given by the SSC for charitable trust. You can take 80G chapter 6A deduction, but you can't take the deduction under section 37 because it should be exclusively and wholly incurred for business or profession. Then you can take. Donation is not related to business or profession, right? And it is not an personal expenditure. There is a huge difference in these 2 points. Understood? It is not an, it not be an capital expenditure. Why? If it is capital expenditure added to asset cost, on that we can claim depreciation, separate route. And it should not have been incurred by the SSC for any purpose, offense or prohibited by law. So if any penalties, breach of law related, if you paid anything, that is not allowed. Sir, I appointed Gondasra. Okay, now I am paying amount. It will be allowed? No. So remember, you should incur lawfully. Then you can take it as deduction. If you incur these all the things prohibited by law purposes or any offense related purposes, it is what? Not allowed. Clearly they are given. It should not have been incurred for the any purpose prohibited by law or which is related to offense. Now I given note points. How many note points you can check? Yes, just I given the 18 note points in this section. These 18 note points, definitely 2 note points you will get it out in your exam. After these 18 note points, we can take a break. Okay. What is that? Very, very important. Listen carefully. These two already I told in section 36 itself. Health insurance policy premium covered in 36. Which health insurance premium is covered in 36. But keyman insurance policy premium, personal accident policy premium covered in which section? 37. Health insurance premium 36. Keyman insurance policy premium paid by employer 37. Personal accident policy premium 37. That is only given here. Now, expenditure incurred by the SSC for CSR responsibility under section 135. Can you tell me? CSR mandatorily we have to incur, right? I think average profits of last 3 years you have to take at least 2% we have to incur for schedule 7 activities as per Companies Act 2013. Okay, we can incur, but it is related to our business or profession? No. So that's why it is not allowed under 37 because it shall not be deemed to have been incurred for business or profession. Even though that is mandatorily as per law also, but it is not related to my business. I am given the society related things. So that's why it will not allowed as a deduction under PCBP. Sir, it is your most frequently asked MCQ. CSR expenditure incurred by the company, it is allowed under PCBP under which section? Not allowed. Now, do you know, I think in every hospital, yes, the many medical representatives are waiting for that appointment of doctors. Why? They will give the free samples to the medical practitioner. So if medical practitioner is satisfied, then they can order the few more medicines from the same company, right? But this procedure is prohibited by the Medical Council Regulation of India. Expenses incurred, yes, whatever the expenses we incur for giving the freebies to the medical practitioner by the which companies will give pharma companies, it is violation. It is completely prohibited. How you can distribute the free samples? That means you are testing medicines on humans. So that's why this is completely violation of an Indian Medical Council. Clearly, which is offense or prohibited by law. Can you allow? No. So that's why it is considered as an prohibited by law. It is not allowed under section 37 in the hands of pharma companies. For whom it is an expenditure, pharma companies it is an expenditure. It is allowed or not allowed? Not allowed. Sir, every point you should remember. The first one, personal accident policy premium. Personal accident policy premium. Keyman insurance policy. Allowed or not allowed? Allowed in 37. CSR expenditure, not allowed. Next, if any freebies are distributed by the pharma companies to the medical practitioner, allowed or not allowed? Not allowed. Next one. Advertisement in the political party souvenirs, brochures, as well as what pamphlets. Generally, advertisement expenditure is allowed if you incur properly. But if you are doing these advertisements in the political party brochures, political party pamphlets, etc., it is disallowed under section 37. On this, you can claim chapter 6A reduction under 80 GGB. Yes, that is others. Sorry, company others. So if that is donation, political party contributions are given by the Indian companies, 80 GGB, then 80 GGC by others. Remember, political party brochures related, if you are given the contribution, allowed or disallowed? Disallowed in business. Disallowed in business head, but allowed in chapter 6A reduction. Next. Cost of abandoned film. Sir, we have a production house. 6 movies we produced. 5 movies already released. We have a profits. But 1 movie is abandoned. That means because of any other issues, script issues or whatever it may be, that movie is abandoned. The cost of, that means up to now we are producing that movie, right? Okay, we incurred some cost. That cost is treated as revenue expenditure. You can take it as deduction under section 37 in the hands of producer. Yes, sir. Understood? This is also important. Cost of abandoned film is allowed as deduction in the hands of production house because it is a revenue expenditure. Gift to employee by employer. Employer given the gift. For employer, it is an expenditure, right? That is allowed under section what, 37. About salary components, if you observe, how many salary components will be there? These all salary component. So salary directly, basic salary allowed in 37. Allowances allowed in 37. Yes, perquisite. Perquisite means gift only. Gift also allowed under section 37. Retirement benefits under section 37. Under VRS is nothing but in 35 DD. Now, customary expenses, that means nothing but what in your office, if you are doing this, all the things, puja, decoration, Diwali expenditure, yes, it is allowed as a business or profession under PCBP head under section 37. Why? If you check all the conditions, okay, not covered, I incurred after commencement only, it is not in personal, not in my home, in office premises only, I am decorating, I am doing puja. Only and exclusively for business. It is not a capital expenditure. It is an offense prohibited by law. Okay, no. That's why it is what? So remember, customary expenses, puja, decoration, Diwali, these are all the things are what allowed. So I am doing profession. My professional income is 10 lakh. For earning this professional income, I am attending the CPE seminars conducted by ICI. I incurred 1 lakh amount. Just joke. That amount is not at all there. Okay, 1 lakh. Now what is that income? 9 lakh. That means CPE seminars, yes, whatever that amount is there, we can take deduction while computing that income under the head PCBP. That means it is allowed under section what, 37. Okay, we can check the conditions for your satisfaction. Not covered. CPE seminars fees covered above, no. It should be incurred. I incurred. After commencement of my profession only I incurred. It is not a personal expenditure. Only for my profession purpose only I am incurring. If I am attending for CPE seminars, I can get more knowledge. Next, it is not a capital expenditure. It is not prohibited by law also. That's why it is called as what? Allowable expenditure. Penalty, breach of law related penalty, law related offense or law breaching if you done, it is not allowed. Breach of contract, In between you and me, I given a promise to you, I deliver the goods in 2 months, ra. But I denied and I delivered the goods in 4 months, ra. How many months delay? 2 months. You are asking the yes ma penalty. You are asking the what ma penalty. Now it is allowed. Why? It is not an offense. Offense means breach of law related penalties not allowed. Contract breach related penalties are what ma allowed. Now, shall we? Again, I am saying, listen carefully. These two also very, very, very important. Breach of law, disallowed. Contract nature penalties, allowed. Now, I think income tax is allowed or disallowed, ma? Disallowed. Income tax payment purpose, we are taken loan, ra. On that loan, we are paying what, ma? Interest. Can you tell me allowed or disallowed? Disallowed. Why, ra? Are income tax itself disallowed. For the payment of that income tax, you taken the loan. On loan, that interest if you paid, that is allowed or not allowed? Not allowed. Simple, ra. Income tax is a personal expenditure, not business, ra. Income tax is what, ma? Personal expenditure. So can you tell me clearly in section 37 we have one condition, what ma? It should not be a personal, but here it is what ma? Personal expenditure. Understood? All of you. Next, tax audit fees, litigation expenditure related to income tax case, ra. Allowed. Yes ma, in my business I haven't one case, appeal is going on or any litigation is going on. Now I am making some payment to the lawyer. Now I am making the payment to the chartered accountant who conducted the tax audit. That is allowed or not allowed? Allowed. Remuneration given to tax auditor. Litigation expenses in case of income tax case. That is what allowed. So now it is also another area. It is very, very, very important. It is very, very, very important. Shall we? Expenditure incurred for shares issue, debenture issue. Tell me, ma, one expenditure we incurred for what purpose, ma? IPO, initial public offer, further public offer, right shares. Because of this, share capital will increase or not? Change in share capital is there or not? Yes. That's why this expenditure is treated as what, ma? Capital expenditure. Capital expenditure is allowed or not allowed? Not allowed. If any expenditure incurred for changing the share capital, ma, IPO share capital base will increase, FPO share capital base will increase, right share capital base will increase. But if expenses incurred for buyback, bonus shares, debentures of loan, ma, debentures and loan if you taken or if you issued debentures, if you taken new loans, share capital base increase, ra? No. If you issued the bonus shares, share capital amount will increase. Bonus shares issued at what, ma? Free of cost. Buyback done, it will reduce. Buyback of shares done, it will reduce. So that's why here I will say there is no change. That's why it is revenue expenditure. That's why it is what, allowed. Ma, remember these three, ra? Change in capital done only when change means nothing but in my view what, ma? Increasing. Here no change means what, ma? No increasing. Are you understood, ra? Yes, what is that? IPO, FPO, right shares related expenditure allowed or not allowed? Not allowed. Buyback, bonus shares, debentures. Yes. There is change or not? Yes. What is the change, ra? There is no increasing. Here constant, here decreasing. So that's why it is revenue allowed. Now next important. What is that, ra? Direct tax. Example what, ma? Income tax. Indirect tax, GST. Ma, if income tax paid, ra, allowed or not allowed? Not allowed. But indirect tax paid, allowed. Because in business we are paying GST. That's why business related expenditure allowed. But income tax is personal nature, that's why not allowed. If any interest on income tax paid, not allowed. If any penalty on income tax paid, not allowed. But interest on GST allowed, interest on GST allowed, penalty on GST not allowed. You know, penalties are always what ma? Yes ma, penalties are always what ma? Not allowed. Are simple ra. I filed return of income delay. So now I have to pay interest. That interest is allowed or not allowed? Not allowed. But GST returns I filed in a late manner. That's why they will ask interest. Interest is allowed. But remember, here subject to 43B. Now we have to check which section ma, whether in 43B these payments are covered or not. As of now in 43B we discussed bonus or commission. What is that? Bonus or commission. Next one ra. Welfare contributions to the, whose welfare contribution? Employer contribution to welfare. Next, interest paid to banks or financial institution. Now we can check the, yes, 43B, you will get first point. Tax, duty, cess or fees. Yes, ma, with interest. Allowed ma, fees also allowed. You can see here. Ma, only penalty is not allowed under income tax also. If you paid, not allowed. Under GST also not allowed, because penalty means you are violating the law. Law related violation penalty is not allowed. Contract nature. Fees ra, just we have one agreement. If you delayed, you have to pay the fees. So remember, tax, duty, cess, fees, interest is allowed. But indirect taxes point of view, now we are reading direct taxes. Indirect. Direct taxes, everything is disallowed. Don't think about it. Ma, in problems I will tell you, Ravi, don't think about it. But first remember, direct taxes related, direct tax disallowed, interest disallowed, penalty disallowed. Indirect taxes, indirect taxes allowed subject to 43B. Indirect taxes related interest allowed subject to 43B. Indirect taxes related penalty disallowed. Clear? Yes. So nothing but whatever now I am taking, these are very, 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 very important. What are that? First, share issue, debentures issue related. Share issue, debenture issue related. Next one ma, direct taxes, indirect taxes point. Indirect taxes, direct tax, interest and penalty. Next one ma, dividend distribution tax or dividend is disallowed. Dividend distribution tax or dividend is what ma? Disallowed. Provisions, I think you know, provisions are always not allowed. Even provision for bad debts is allowed in case of banks. Provision for bad debts also, everything also disallowed for others. But only one provision is allowed for banks. What is that? Provision for bad debts. Here what are that? Provision for loss of subsidiary. Provision for loss of subsidiary. Provision for deferred tax. Provision for diminishing the value of asset. This is only simply what ma? Bad debts. Diminishing the value of asset. What is that value of asset? Debtors. Provision for unascertained ra. My ascertained allowed ra. Provision for ascertained liability allowed. Clearly we know that how much liability we will get. So that's why that is allowed. Unascertained liability is what ma? Not allowed. Last 2 points simply. Are you done one mistake as per law? Now you are doing the, instead of coming out of the prosecutions, penalties, etc. Now you are settling that case. If you are paying any settlement amount, that is not allowed as what ma? Business expenditure. What is the reason? You are doing the infraction of law. If any expenditure incurred for, yes ma, settling the regulatory defaults, or if any defaults done by you under this act, what are SEBI, SCARA, Depository Acts, Competition Act. So this expenditure also allowed or disallowed ma? Disallowed. Ma 37 is an very important. 36 also very important. Listen carefully. Yes, sir. In 37, whatever the points we have, at least day before exam also you have to refer. Sir, how you written these 18 points, sir? Some points I taken from the past examination. The many attempts they asked these adjustments, that only here I written. So just 1 minute I will recall everything. Then we can take a break. Yes, please tell me. Premium paid for the personal accident policy, for keyman insurance policy. Is CSR expenditure not allowed. Freebies distributed by the pharma companies to free medical practitioner, not allowed. Advertisement in the political party souvenirs, not allowed in Pgbp, allowed in chapter 6A reduction under 80 GGB, GGC. Cost of abandoned film is allowed as deduction because it is an revenue expenditure. Gift to employer, gift to employee by employer, allowed. So customary expenditure, puja, Diwali and decoration is allowed. Next one, expenditure incurred by the CA for attending the CPE seminars, allowed. Penalty for breach of law, not allowed. Compensatory penalties regarding contracts, allowed. Interest on loan taken for payment of income tax, that means your personal expenditure payment purposes, you are taken the loan related interest is not allowed. Tax audit fees, litigation fees is related, allowed. That means if you are paying any tax audit remuneration to that CA, or if any litigation related, if you are payment to that CS, that is allowed. Shares issue expenses, IPO related, FPO related and right shares related, if any expenditures increase, that is incurred, that is capital expenditure, that is not allowed. If anything is incurred, buyback or nothing but debentures or nothing but loans or bonus shares, it is allowed. It is treated as revenue expenditure. Direct tax related, direct tax also disallowed, interest also disallowed, penalty also disallowed. Indirect tax related, yes, indirect tax allowed, interest allowed, but penalty not allowed, but subject to 43B. Next, if you observe, dividend distribution tax is not allowed. Provisions are always not allowed. Settlement amounts are also not allowed. Clear? So this is only section 37. Now, okay, tomorrow we can continue the same time, 10 to up to completion. So first I will tell you allowances done. If you observe, allowances done completely. Allowances done. So disallowances tomorrow we'll discuss, and problems also. These many pages we discussed. Okay. So that means these all the things are done. Now tomorrow we'll discuss disallowances. After disallowances, some other provisions are there, that also we'll discuss, and directly we can do some 4 to 5 comprehensive problems. Today we discuss a depreciation questions also, and section 35 related questions also we solve. Yes. Take a break. Tomorrow we'll meet at the same time at 10.